Hi folks, good morning. Can hear me or there is any audio problem? Let me know. Everyone is cool. Please join to the vote. Really would love to need to know how many of you are bullish, how many of you are bearish today, and those who people doesn't have any bias. Hello, hello, hello. Can you hear me? Good morning, loud and clear. Okay, brother. No need to waste the time. Let's go with the calendar forexfactory.com. Monday, we have kind of medium impact news around 8:30. Not important to me. Today we have non-employment change or a lot of news we have around 8:30 a.m. and 9:45. Trade is gonna be valid from 10 a.m. New York local time. Wednesday FOMC, no need to worry about that. CPI Thursday, of course we can trade this CPI, you know how to trade it. And Friday is normal or medium price action. So yep, I think we don't need to worry about that much. Only tomorrow we have to wait until 10 a.m. And then all other days we can trade before 10 a.m. Cool. Yeah. Please push the like button over here. This is the weekly chart for NQ, and this is the last week candle. So mark the high and the low. Go for the TGIF. You'll be able to see that this is the 20%, this is the 30%. Market didn't finish the TGIF. So today, my first intention to see if it can trade any of these two line and then it can start to fall. That was my first expectation. So far, this market actually went higher, traded both 20%, 30%. TGIF is gonna be done if today's candle close in between these two line or below those lines. TGIF will be clear by today. We'll see from the lower time frame what we can find so far from the weekly chart. Nothing to see. This is the daily chart, and from the daily chart, this is the last daily candle of the Friday candle. Candle closed here. This candle opened here, started to fall. By the way, I'm going to remove this box over here, and it has traded this small fair value gap over here. See here, this candle low, that candle high. This is a fair value gap. Below this fair value gap here, this is another fair value gap, which is an unfinished business. In my opinion, this market should come here first to this gap, and then it can start to go higher. At the same time, I have the buy side liquidity here. You can see all of these buy side liquidity. I'm just going to mark them. Beautiful buy side liquidity over here. Market fall. Trade the range in between the low and high. I think it has traded the 50%. Oh, okay, it didn't actually. It has traded the upper quadrant, I guess. Upper quadrant. But yeah, around the 50%, which is the equilibrium of all both of this range. I really would love to see it will come here around this gap. Will trade this lower candle, down close body close candle, at least the opening. Then it will start to go higher for this buy side liquidity. Finally, this bearish gap and all-time high. I'm not bullish yet today. Not bullish. I'm bearish, at least for this line. So from the lower time frame, I'll show you the sell side liquidity. So it's not important here, but so far from this daily chart, I'm bit bearish, not bullish. For our chart, same buy side liquidity. Market broke so beautifully. There is a gap. I want to see that this gap is going to market is going to be hold by that gap, and then it will start to fall. When it will fall and how far it will fall, we'll see that later. But so far, my intention to this down close body close candles, they will be traded before going higher. They are the beautiful bullish order block. So I really would love to see they will fall a bit more and then traded these bullish order blocks, consecutive blocks, and then go for that buy side liquidity by holding by that fair value gap. Hourly chart, you can see that this market broke so beautifully come here, this low and that low. Even though this low has taken by by a tick or something, but it seems like a very clean sell side liquidity to me. I'm more interested to see that market will fall here. This sell side liquidity will be taken, and then this buy side liquidity is going to be targeted by the market. But so far, this big gap from the hourly chart, which I will make it a bit smaller from the 15-minute chart more precisely. I want to see that will be traded, and then market will fall for this sell side liquidity over here, clean sell side liquidity, and then it will trade this fair value gaps where we have the order block, kind of hourly order block or the 4 hour order block, whatever order block it is over here. So would love to see this sell side liquidity will be cleared. This will be traded, and then the market will go for that buy side liquidity. From the 15-minute chart, this high, that high, both of them will be cleared. So that gap I was asking about from the hourly chart, that I'm gonna make it much more smaller. First, would love to see this market will come here to this 50-minute bearish fair value gap. Then it will fall for this sell side liquidity, which is very clean sell side liquidity, this low, that low. And finally, it will come here from the 15-minute chart as well, the last fair value gap to that specific leg. That is my expectation so far. I'm not bullish. So far, I'm bullish until this 50-minute gap. So around 9:30, if this market fall first before going to this fair value gap, I'll start to look for buy. But around 9:30, if this market come here for the first time to this gap, I'll start to look for sell. If it went through this gap and start to go for this buy side liquidity, which is below that buy side liquidity. So I'm going to mark another buy side liquidity here from the 15-minute chart. Remember, this is the extreme buy side liquidity. Okay, like kind of market is making this buy side liquidity from long time, not only from here but also from here. You see all of these highs. So this buy side liquidity market is creating here for a longer term. It's kind of an extreme liquidity that is kind of market can keep coming here and rejecting from there for making believe to the retail trader this is a strong resistance, something like that. But below that sell side buy side liquidity, I have this smaller buy side liquidity that has been engineered by Thursday and Friday. Both of Thursday and Friday has built this buy side liquidity. That liquidity will be my interest if this market closed above this gap. So if it is closed above this gap, I'll start to look for this buy side liquidity first, then this volume imbalance, and then this market will start to fall for the sell side liquidity. All I mean to say, I don't want to say this extreme buy side liquidity will be cleared before clearing this immediately created sell side liquidity. The reason is, if this market really would love to keep going higher for the all-time high or the new all-time high, and it is going to leave this sell side liquidity, that means all the people are going to take the buy here, they will be profitable when this market will be the all-time high. If this market is really would love to make that, so in that type of situation, of course market maker is not going to allow those buyers to be profitable. So what it will do, it will first clear them, all the people they took the buy here, they'll be stopped out. Then they will use it as a breakout traders. That means buyers will turn into sellers, they will take the sell, market will start to go higher. Then first buyers will be stopped out, then sellers will be stopped out. Nobody will be like brave enough to re-enter over here, and this market will keep going higher without giving any kind of chance to re-entry. It will keep going higher for those buy side liquidity. That is my expectation so far, and I really would love to see this is how this market will work. So it will come here first, not precisely, because here I have another gap as well. So if it starts to react from there and show me some kind of bearishness, maybe I'll frame it. But I really would love to see it will come here to this parallel gap more precisely, and then it will start to go for that sell side liquidity. That is the best case of scenario for me. If it happens like that way, I'm so much happy to catch that sell. Without this, whatever is going to happen, that's a low probability. What do I mean by that? Maybe this market will fall from here. So what did I say? If it doesn't come here, I'll start to look for buy. In that type of situation, either I have to let the buy go, or I will try, maybe market will not come here. Instead of that, market will go a bit higher and fall, take that sell side liquidity. It's a low probability. Where the market will go first? Here, imbalance or sell side liquidity. But if it is finished, that market has traded this gap and then started to fall, that is kind of one-sided run. I don't need to worry about something else happen above the market. So I know that this market is falling for this sell side liquidity. It's gonna be a high probability for me. Otherwise, all other scenario is a low probability. I hope until now, uh, the things I wanted to say, the bias or about the market move is clear. Yesterday around 2 hour, I mean the Discord group, I gave this a screenshot because this was before the market open. I think it was here. Yeah, it was before the market opened. So I gave the screenshot like this way, that from market here, it will come here first, then it will take this sell side liquidity, and then it will go for that buy side liquidity. At least this buy side liquidity and then that buy side liquidity. This is how I determined the market, and I would love to implement my idea to the market if the market give me the exact price action what I am expecting. Now I would love to show you something. It's gonna be a bit difficult to understand and bit complicated. Don't pay so much attention. If you feel it's bad or I'm not getting anything, just let it go. Those people who are my members, please focus over here because you are actually well known with these things. Just a second, let me actually keep them in the lower time frames. That gonna be serving. This is the weekly chart, and you can see that this high over here, let me actually show that. This high has cleared all the buy side liquidity. This low, it has cleared that low. Okay, think like this is a swing low. So it has cleared that low. So this is a dealing range. All of this price action is in this leg over here. I'd love to mark that leg high and the bottom. This is the equilibrium. Now, if this market is bullish, where is it coming from? Is it coming from extremely premium? There is no other high, extremely discount. There is clear the liquidity. This is the extremely low, extremely high. Market is coming from here until the extremely premium. Absolutely perfect with that. Absolutely perfect. Because it is going from the very deep discounted area. Come to the deep premium area. Absolutely expected or no problem with that. Now, when this market has traded the extremely premium and then come back again, fall to the equilibrium, here, this equilibrium level and the extremely discounted level is important to me. Until now, whatever price is done, absolutely perfect. Just remember, I'm bullish. I'm not bearish. I don't want to say this market will keep falling. Instead of that, I would love to see keep going higher. Coming to the daily chart, and removing this quadrant level because it should trade the premium area. It has traded the premium area, so I don't need this area anymore. I'm more interested to look for this leg now. So this low which has cleared that some kind of relatively equal low, so this low to that high over here, that high has cleared some swing highs over here. This swing high has been cleared over here. So inside this big leg, this is a kind of small leg inside that leg. So the whole price action from the daily chart is here, which is inside that leg. This leg jobs is done when the market came to the deep premium. So here is the new leg. I'm expecting this market will keep going higher. It is not in the deep premium area. Where should it go to comparing with this leg? It can never go to this discounted area. If it really would love to go higher or to take the all-time high or this buy side liquidity or anything over here, if it really would love to go over there, it will never be able to come here to this deep discounted area or this lower quadrant area or whatever you say. You see this volume imbalance? That is my area where I'm watching. If this market come here, I'll keep looking for sell. If it doesn't come here, which it should not come, it should keep going higher. But how far it can maximum fall? Until this equilibrium, that is the last line, this market can fall. Around this last line, I have this beautiful fair value gap over here. So I'm more interested to see it will come to this fair value gap first, which is near to equilibrium, and then it will start to go higher for this buy side liquidity. those people who take to sell over here, they will start to think that I will move my stop loss while this market will go below the range 50%. When they will go below this range 50%, they will move their stop loss. I don't want to say it will go below this 50%. Instead of that, I really would love to see it will fall a bit more deeper area to this fair value gap, and then it will start to go higher. That fall should happen because those people who took the sell, they will get confidence to add more after seeing that fall. Otherwise, just some people actually took the sell. So I want make them full first, then it will go higher. From the 4 hour chart, so just remember this leg, whatever this sell side liquidity, buy side liquidity, don't get confused by them. From here 4 hour chart, this is that new dealing range, but inside this new dealing range, which is the what to say, I mean the daily chart, I'm going for the 4 hour chart. So I'm going to remove this daily chart. Just remember, I'm expecting it will come around this area, which is 24886, or just remember this leg or this candle. I'm watching this market to come around here, some area. In this 4 hour chart, you'll be able to see that this low has cleared this low, that low, all of these lows has been cleared by that low. At the same time, here, one of this low, let me show you this. See this high over here, just a bit above of this highs. So this is a new dealing range inside the daily dealing range, 4 hour dealing range. So why you are actually switching the dealing range or the leg from one time frame to another time frame? Because we are going to trade this small candle. See this small candle? We are just going to trade that candle and the next candle. So I don't need all of this price action. All of this price action is helping me to understand that where this market is reaching for and why it is reaching for there. So in this area, this is the high, this is the low, a new leg where the market is right now trading. High to the low. You'll be able to see that this high has left the buy side liquidity. This low or lows has left the buy sell side liquidity over here. If I'm expecting this market will fall for this sell side liquidity first, remember this buy side liquidity is going to be cleared later, because this market is interested to come here, which is the daily gap, else also the 50% range where I'm expecting it will trade, and then it will go higher. So we are expecting this market will fall first to this area here, the order blocks or the daily bullish fair value gap. I just didn't mark it, don't get confused. Here is that gap. As I'm expecting, the daily candle will fall first, then it will go higher. And from the 4 hour chart, I have this new dealing range. I'm not interested to see this market will come here, which is a deep premium area. Deep premium area. It can maximum trade the equilibrium, the same thing in an opposite way. From the daily chart, I'm expecting it will trade the 50%, not coming to this deep discounted area if this market would love to keep going higher. That same thing in an opposite way I'm going to implement here. I'm expecting this market will fall fast for the sell side liquidity, because daily chart wants the market bring it here. Okay, wants the market to bring here. For our chart, it should not go to this deep premium area if it really would love to follow the daily direction for this sell side liquidity. So from 4 hour chart, will be I'm expecting this market can maximum come until here to this area, which is inside this with this gap. So I need more precision that where it can exactly come, how far it can maximum come here before falling. Coming to the 4 hour chart, and the 4 hour chart, you will be able to see the same thing uh, in a like whatever I'm going to show you from 50-minute chart is the same thing. Okay, so I'm just going 50-minute chart instead of the for on our chart. However, so right now from 15-minute chart, what I'm expecting, this 4 hour quadrant levels, here is the important area. This market will come maximum, then it will fall for this sell side liquidity, and more importantly this bullish fair value gap. From 15-minute chart, you will be able to see that, see this area over here, this area is aligned with this 15-minute last fair value gap. It's a very important last fair value gap where I'm going to remove this area. I'm expecting it will come here maximum from the 4 hour chart, and then send the market lower for the sell side liquidity. But from the 15-minute chart, a new thing happened over here. You'll be able to see that Here, this highs is a buy side liquidity, all of this area. Below here, there is another swing low, but this is a high that has cleared that high. This is a low that has cleared that sell side liquidity. Above this high, I have this buy side liquidity. So I'm more interested to see how this leg is going to work over here. So market left that buy side liquidity here, and the sell side liquidity or the leg that low is over here. Now I'm going to remove this 4-hour chart. Just remember the 15-minute gap and this area, the 50% of the 4-hour equilibrium area are around the same level. Just remember that one because it's going to be a lot of lines. Now here you can see that when this market left that buy side liquidity, remember this is a smaller buy side liquidity below that extreme range, that is the extreme range area. Below that range, market has built another buy side liquidity where it has cleared that high. So the drilling range is here, but above this high, as we have the buy side liquidity, I'm going to mark it from there to there. Why I'm not marking that high or this high or something like that? Because below those area, this is the buy side liquidity. Above this buy side liquidity, if I had some other buy side liquidity here, I would go for that. Or if above this high, there was just single highs, not relatively equal highs, then I would go for the leg high here and low here, because all of this price action is inside this leg over here. But just above this leg, as we have this clean buy side liquidity, I'm going to go for here until that low which has cleared all of these lows here. Okay, so the low has created the sell side liquidity, the buys has high has created the buy side liquidity, then market started to go higher. If this market is extremely bullish, then it will go above this line, which is the 0.75 or the upper quadrant line or whatever you say. It will go above that line or it will touch around this line. Then it will go for this buy side liquidity from the lower time frame. Okay, this is the extreme buy side liquidity. It's not my interest right now. I'm more interested to see this buy side liquidity and this sell side liquidity over here. So if I'm bearish, I will always expect that this market can maximum trade until this equilibrium, which is over here, with this gap around here, which is a equilibrium gap from 15-minute chart. I am more interested to see it will trade this equilibrium gap over here. This is that gap. It will trade this gap and it will start to fall for this sell side liquidity. Yes, I know it can maximum go until the equilibrium, but I want to see it will work with the discounted area. The more discounted area it will work, the better opportunity for me to take the sell. However, if it go above this equilibrium, there is nothing wrong. It can go for this fair value gap by the wick or by the body, but I'm not going to allow one even single candle closing above this gap, because closing above this gap means the next PDR is over here, which is in deep premium, which is kind of confirmation of that buy side liquidity. I'm not interested to see not even a single body to close above this gap if this market really would love for this sell side liquidity. Why sell side liquidity? From the daily chart, market would love to come for that equilibrium area last fair value gap. From 4-hour chart, I'm seeing that this market is here around the equilibrium. Remember, around below the equilibrium, so it can go until the equilibrium from following the 4-hour chart. So around this area, I'm expecting market is going to clear that sell side liquidity from the 4-hour chart. From the daily chart, fair value gap, from the 4-hour chart, now I have the sell side liquidity. From here to here, sell side liquidity. From the hourly chart or the 15-minute chart, both are same almost. So from the 15-minute chart, I don't want to see body is going to work above this line. But yeah, of course, it can come until here because 4-hour chart is asking the market until here. The daily chart is telling the market to go until there. So all of these markets are telling the market to go over here. If it go over there, that is a perfect place to think about a fall for this sell side liquidity. Is it clear? If it close above this high, that means the daily chart doesn't want to go for that equilibrium gap. Instead of that, it would love to go work with the premium area of the daily chart. That means if it go over here means 4-hour chart doesn't want to clear this sell side liquidity. That's why it is sending the market to the deep premium area to clear this small buy side liquidity first, then work with this old weak opening gap, then it will reverse for this sell side liquidity over here around this area from the 4-hour chart. From the 15-minute chart, when it is going to close above here, I'm going to switch my bias from bearish bullish for this small buy side liquidity, because market is coming to the deep premium area where it should not come if it wanted to catch that sell side liquidity. So when it will come here, I'll start to think about this buy side liquidity by marking a new leg to understand the deep premium and discounted area from 1 minute chart. Is that guys clear or not? Just let me know. This is how you are going to predict how this market is going to work, and if it doesn't work like that, what I'm going to do. I'm just before the what to say, I mean the 9:30, so would love to finish this with the some valuable information I always try to give. As I am bearish, remember, as I am bearish, I'm not interested to look for any kind of sell be above this fair value gap. The fair value gap prior to 9:30 is obvious to me. If I am bearish, I am not going to take not even a single trade above this bullish fair value gap, which is now respecting prior to 9:30. I'm able to mark it from 15-minute chart, that's why I'm not moving to hourly chart. If I am like I in hourly, there is nothing from 15-minute chart, I'll go to the hourly chart. Before 9:30, if I see this market, just think like that, something just happened, and like the next candle come here around this gap, or maybe around that gap, whatever gap is below this gap, just think like that, prior to 9:30, that means 9:29 happened over here. Immediately I'll remove this gap and I'll mark that gap which is respecting before 9:30. Whatever gap I have before 9:30, that gap should be broken if I'm bearish. If I am bullish, I will wait for this gap to be closed. No, until this market is above this gap, or above the 50% of this gap. I don't have any importance of this gap to think to be broken. Why? Because this is not the last fair value gap. If it was the last fair value gap like this gap, then I would wait to look for any kind of buy above this, not only above this gap, but also above that gap, which is an important gap, just the last gap if I'm bullish. As I'm bearish, for this area sell side liquidity, of course I can let the market go until here. So if I find a buying opportunity above this gap, until that gap, I will try to catch that buy. If there is no buying opportunity, instead of that sell, market is just falling, no sell I will take until this market is not going to close below this gap. For the sake of this conversation, market come here first and then give me the sell, kind of this. I don't need to think about this gap anymore, because the job you have done from weekly, daily, for on our 15-minute chart, everything is telling you that market will come here first, then it will keep falling. So in that type of situation, this gap doesn't have any value. Only if it doesn't happen like that way, or it is going to happen like this way, this where this market is not coming here, then I have to wait for this gap to be broken to frame a 1 minute 1 minute 1 minute time frame. They'll set up over here, something like that. I hope guys the point is clear to you. If you still have some confusion, please let me know that. Now when I'm just opening this chart, all of you know what is going to happen, all of these gaps, how far this market can go, and like where it will go for, you know everything. Just you need to see how this 50-minute is working, just for your understanding. Now tell me please, do you guys got the point what I explained so far? Did you get the point or not? Please let me know that, okay, please everyone. No pushing button is valid before 9:30. What is my expectation right now? Can anyone, any of you can tell me that? What is my expectation right now? What do I want to see? Any of you, can you please tell me that? What I want to see right now? Where the market will go? I need to confirm that, because later when the people will join, new people will join, they will say, brother, you told buy, now you are telling sell. Now you are telling buy again, they'll get confused. Okay, so first I need to know where I'm going to think this market is going to be. Is it bullish, is it bearish, or anything where I'm expecting this market will go? Okay, thank you, Tech. Absolutely. Buloni, I'll call you Buloni. Hey, Kangjang, how are you, brother? FL Trader, Dora, thank you so much. RX, thank you. Sell side, no, no sell side. First bullish, then bearish. Absolutely, brother. So first, if this market fall, clear this sell side liquidity. Am I going to take the sell? Of course, no. I have the limit. I know that no sell is valid until the 50-minute is not going to close below this gap. So even if I see a fall first, I don't need to worry about that because I know what I'm doing, right? In the same case, if this gap start to work by this candle, okay, this is 9:30, so it will fall this here. The next candle will close above the order block. I'm able to take that order block entry, take the buy for this area. I'm seeing this fall. Do I really care about that? Of course not. I know that why it is falling. Just taking this sales and liquid, then it will start to go higher. So I'm not afraid. I'm not going to frame any trade. Let's see if any of you can frame the trade or not. I'll just talk as a hindsight, okay? The first trade. I want to see if any of you can take it or not. If you see any opportunity, let me know to the comment box. I will observe it, okay? The direction is clear. What you want to see, it's clear. How you want to see that, it's clear. Everything is clear. You have to just wait for the action, price action. If you see the price action, you are going to catch that price action. That's all. Good morning, Kishore. First bullish until mid-front and then bearish. Absolutely, brother. Don't look at here. Just look at here. What is happening over here? Seems like bearish to you. On my right hand side, seems like bearish to you. Yeah, from 1 minute chart seems like a bearish market, but from here, does it look like a bearish market, or is it? Are you seeing that how beautifully the 50% of this gap is holding the market? Are you trading today? Are they before NFP? Of course, sir. This NFP, I don't care about that. First bullish, then bearish. Absolutely, Jamil. 25356.25 long. 53565. What did you long? 56. Okay, brother, you took the long before. Did you take the long, or are you going to plan the taking the long? 925 order block. This one? I don't think so. That's on order block. We'll see if the body doesn't close below this low, then yeah, you're right, brother. This is on order block. If the body closed below this low, of course, it was not the order block. By the way, if any of you are taking, I mean, interested to take sell first, please go for that. I will not take any sell until this market is not going to close below this gap. In that type of scenario, I will think that, oh, okay, market is not interested to go higher first. Instead of that, It is interested to trade this gap and then it will have to fall. All of this fall, I have no intention to touch it. I'm just watching if it can clear some liquidity and then start to go higher. And there is the opening gap, either 50% is a good place for reversal. Good morning, Anshuk. Phoenix, CEO of 5-minute fair was just tapped. If it hold, could be a long. Yeah, also there is no long. Let's see, brother. Just remember, until the 50-minute candle is not going to close below this gap, I'm not interested to think about a sell. All I'm seeing here, this market has cleared some sell side liquidity. There is a gap over here. If it could trade this gap, that could be the best case of scenario. By the way, didn't do that, no problem. We'll see if it can reverse now. It will be the best if it could trade the 50%. That could be the best. See, okay, we have the hourly bullish gap here as well. So did it trade this bullish gap? Now it will start to go ahead, no problem. Any kind of buying opportunity above this consonant crossment, I'll try to look for that buy. I'll just mark this bullish gap as well on the hourly chart. No buy is valid below the concurrent crossment of this gap from 50-minute chart. Just remember that things again. I'd love to see if it can work as an inverse gap. This one, can it work as an inverse gap? Go for the premium and discount. Look for this area. This is the low that has cleared all of these lows. This is the high which has cleared all of the highs. If I go for the premium and discount to that specific leg from here, I'm expecting this market will go higher for this gap. I would love to see this market will tap to this line. This is the deep premium line. If this market really interested to keep falling here, it should never reach until this line, which is the deep premium area. It should never come over here. So for the first time, if I see this market come here, around here, okay, just think like one candle come here, wick came here, closed above this gap here, above that gap. I'm going to keep this 50-minute bullish gap from keep away from my chart. Okay, so here I'm going to mark that gap here, here. That's gonna be the beautiful inverse gap. First of all, it should not come to this deep premium gap if it is interested to keep falling. So it will come here, it will inverse this gap, a new leg from here to here. You will expect market is not coming to this deep discounted area and it will keep going higher. We'll see if it can provide that opportunity. If it keep falling, will never ever come for this line over here for that leg. And keep falling doesn't mean that it will keep falling. It will keep fall until here, which is the 50%, or to say, I mean the 50% of the opening gap, or maybe until the 50% of this hourly bullish gap. If I'm interested to take the sell, as it is respecting here, see this order block, that is the entry opportunity for me to take the sell from here until this 50%. While it will tap to this order block, that is the sell, I can't simply trade this gap. I can trade this order block for the better confirmation if it give me the, of course, the opportunity. It come here now in a very good area while all the sell side liquidity has been cleared. It has traded the gap, also traded the hourly bullish fair value gap. Would love to see if it can start to move now, go higher. And if it keep falling, when you are going to take the highest risk, when this gap is going to be broken, the last gap, to think about this sell side liquidity. Until then, I have to either wait for this candle to close below this gap, or this candle closed below that gap. Any of candle close below this gap. If it close below this gap, then start to go higher. It's confirmation to take the sell. If it wanted to go higher, it would come here, give me the opportunity to take the buy. It didn't come here. I'm not interested to take the buy from this inverse gap anymore. This is not important. Now we'll see, because it has came where it should come. Now it should start to go higher. Now or never. And the new low is here, so it should come to this deep premium area now. Lowest down close body close candle is one of the best order block here. So far, I actually don't know it's gonna be the order block or not, but so far. Price leg high, price leg low, 50% premium area. So remember this area. It come here means this is going to be traded. If it doesn't want to fall, go below this gap, it means that it's bearish only. No bullishness. There is no bullishness. This is the opening gap 50%. Here, this gap doesn't have any value to me. I wanna see that market is going to close above the 50% of this candle. Candle. This is the 50%. I wanna see a body close above this candle. Entry already you know where you should frame the entry, right? I'm just not going to talk about that. What I'm going to want, I wanna see body close above this mean threshold, that bearish order block mean threshold, above this 50%. হ্যালো, কি ব্যাপার? ফোন ধরো না কেন ফোন দিয়ে? আচ্ছা, আচ্ছা, তারা হোক। আচ্ছা। আচ্ছা, রাখলাম আমি লাইভ। He's going to take Asia London. Low. Finish. Good job. Target 25034. 5. Four. The first body will close above this line. I will try to frame the buy from this gap over here, from that gap. If I see a body has closed here, I'll try to frame the buy here, take until there, at least here. First body has to close above this line. It will take me long. We'll go for 1:1 partial. That 22 handle stop loss, 28 handle. Okay, we'll just go for 1:1. I would love to see that if the sorry, not love to see that. If the candle closed below this last fair gap, means there is no more barriers to present the market here for to take the sell side liquidity. Here only I will observe this gap a bit. If I can frame a sell from here, I'll try to take a partial here now. Without clearing any buy side liquidity, I'll not frame any kind of sell over here. No more buy is valid to me. If with the first time it will clear some buy side liquidity, I'll try to take the sell now. First of all, it closed below this area, but it has still the possibility for me from reversal from this area or that area. As the market has broken all of this area right now, trading the new week opening gap high, if it gives me some kind of reaction to clear some buy side liquidity, I'll be able to catch the sell. Otherwise, I'll not touch this sell for this sell side liquidity. After clearing the sell side liquidity, I'll start to look for the buy side liquidity. Like it's falling without clearing the liquidity, I will not ever look for a sell side, sorry, a sell opportunity. There's the market without clearing the buy side. Will clear this sell side liquidity, will frame the buy setup. I mark the new week opening gap with the fair value gap, the mid bear candle. I don't understand what did you mean by that, Nikki. If there is no buy side liquid taken, I will not take any kind of sell. Equilibrium, fair value gap, perfectly trade. Now falling for falling for this sell side liquidity. From 4 hour chart, was expecting here, but that was the perfect area for falling. I told you that if it happens, I have to wait for this candle close below this gap to to frame the sell to understand that this market is not coming here. Instead of that, it is working here and going for that sell side liquidity. The market is bearish. First wanted to see it will come here. If it doesn't happen, which can be happen, or maybe it's not going to happen. Doesn't care. I don't care about anything. Fall here, the last fair value gap. I can frame a sell after closing here until this gap, but there was no opportunity because this candle close, that candle open, trade this gap. So when this closed below this last gap, there is no restriction to clear this sell side liquidity. It's going to fall for that. Frame that sell. I need 1 minute to clear some buy side liquidity. Even if it is one swing high, it's more than enough for me to frame the sell. Market here for the first time cleared the buy side liquidity. Here, trade this equilibrium and the fair value gap. We knew that is going to be traded. Fall. This is the selling opportunity. I'm not able to sell because I was expecting this market will come here first. If I was expecting this market is going to fall from there because my high time frame was telling me to fall it from there, maybe I would be able to frame this sell first after clearing the buy side liquidity. Market structure shift, fair value gap, trade that fair value gap, first partial here, hold the trade for this sell side liquidity. As I was not interested to see this fall before coming here, I need the confirmation. What type of confirmation? First, this gap, sorry, not that gap. This gap should be broken, and then I will start to frame a sell from here to here. The market was extremely bearish. I was not able to catch any kind of sell until here. No sell was valid. Waited for this last fair value gap to be broken. Perfectly, the last fair value gap has been broken over here. Interested to see some kind of reaction from the new week opening gap. So far it's getting it over here. Just the reaction to clear the buy side liquidity before falling again for this sell side liquidity. So it's not my buying opportunity over here. Market will now start to go higher for this gap and this buy side liquidity. I don't give a shit. No sell is, sorry, buy is valid to me right now. I'm just watching the reaction or to take some buy side liquidity first, then will fall for this sell side liquidity. All of this fall we could catch if this market come here and then started to fall. Our bias, what was our bias? Those people who are in my Discord, you guys already know that even after the market opened, so I gave you the screenshot from here. I told that it's going to work exactly over here, then here, then there. It's not a bearish market, it's a bullish market. So don't get confused after seeing all of this fall. I have already explained at the beginning why this fall is going to be happen, why it is important to fall first before going higher. So this is the market which is going to fall to clear this sell side liquidity to trade this bullish fair value from the daily chart, and then it will go higher again. It's a big bullish market. This is just kind of liquidity take and run. Market will clear it. Those buy side liquidity is on the queue. Now, as I failed to catch just two bear candle, market has opened just 40 minutes, I guess. If I miss this two candle from 15-minute chart where 1 hour is equal four candle, 2 hour 30 minutes, sorry, 2 hour is our session. 2 hour means 8 15-minute candle. So far there is 1, 2, 3. We'll have 5 15-minute candle. One 15-minute candle is equal at least 30 handle. I don't need to worry about this. And those people who are writing to the comment box, either you have missed what I told at the beginning, please rewatch that part. Every single one of us who were with me from the beginning, they knew that this is going to happen. They knew this is going to happen. If you don't believe me, ask them. Whoever were with me at the beginning, it is a high probability that market will reverse from there. I already told that, but it could go until there. That is the area it could go. Maximum run, that is the maximum run. Best is going to happen from here. Even if I would love to frame the sell, I need to wait for the next confirmation from the 1 minute chart. Every single time I was trying to frame a buy setup, was that a swing high was the target. Because even if this market is going to fall, it should take some swing high before falling. As you can see here, it go until there, failed to clear this swing high. Now it will start to fall, clear the sell side liquidity. I will have nothing to do. I will let this go, take that sell side liquidity. So I knew what the market is going for. I was not able to touch it. It doesn't mean that my job is done. No. After clearing this sell side liquidity, I'll start to look for buy. Or after clearing some buy side liquidity, now I'll start to look for sell again for this sell side liquidity. So what I'm doing by knowing that what I'm doing. It's not something like I've seen this market is falling, so it's a bearish market. It is interested for that sell side. You know, it was absolutely calculated from the very beginning, from the weekly chart, daily chart, hourly, 1 hour and 15 minute, then 1 minute chart. Everything is expected. Just the market is just falling without taking any buy side liquidity. After that much fall, where we know that what is going to happen, I have seen this bullish candle. Am I going to take the buy? Of course not. Here, that is the last line. I had the opportunity. Now, unfortunately, that didn't work. That inverse gap didn't work. 22 handle loss. I'm waiting with that 22 handle loss to get at least 40 handle partial. If it take that sell side liquidity, buy will give me 40 handle. If without clearing the sell side liquidity, it clear the buy side liquidity, it will give me more than 40 handle partial to catch. Not worried about anything else. Without any kind of opportunities, it will keep falling. I'll let him fall. Clear this, I'll start to look for buying opportunity. You'll see that. Absolutely, brother. Why you was targeting that sell side? I thought it will reverse after it takes 2 kilos. Brother, at the beginning, I have already explained why and how and when this market is what going to happen. I heard you were bullish earlier until mid cap was inversed. I guess now you are bearish for sell side liquidity. No, brother, you missed the point. That 15 minute gap is the extreme target. That means this market can maximum go over here. Best area fall from here. This is the gap we have outlined, and with all of these lines were there. It was a bearish market from the beginning, but at the opening, Judas swing could send the market over here. If it doesn't do that, when the first time it will close below this gap, that is my selling opportunity. No sell is valid above this gap. It was very restricted. So if I see that this market doesn't want to come here, instead of that, it would love to work with this gap. It has to close below this gap to give me the selling opportunity. Now it has closed, but it closed here. Okay, so when it closed here, very near to this last gap, I have two opportunity. First, it will go higher, clear the buy side liquidity, give me the sell for this last parallel gap, or it will come here to this last parallel gap, and then the reaction will send until a swing high to be cleared, then it will fall again. So if I find the buy here, I'll go for that swing high to clear that what is, I mean, the target. Remember when I framed the buy here, my target was here. That was my target, not here, not there, not anywhere. The target was here because that swing high was interest for me to interested to be taken first. Then for this sell side liquidity, it didn't do that. I got stopped out over here. Then market fall, not even a single time it has cleared the buy side liquidity. If it could clear that high, even that high, that fair value gap could be my sell. That could be my selling opportunity from this fair value gap. But now I will not frame any sell over here, even though I know that this is gonna be taken. Without clearing this sell side liquidity, this market will never go above this area or above here. Okay, whatever it is, it will never go over here without clearing this sell side liquidity. Still, I can't take the sell from here. If it could take that high, that could be my sell for this sell side liquidity. Now it will fall, I will watch. I will not touch it. It will fall, I will watch. That's all, brother. First time I saw that it doesn't mean that I'm going to clear the buy or I'm going to take the buy. Why? Because it is going higher to clear a swing high, maybe one, maybe two, maybe three. I don't know. But at least one swing high is going to be cleared by that run. If it happened, I will take the sell. But it doesn't mean that I'll catch the buy here until that swing high. What else can happen? It will go very near to this line by respecting this gap, a small gap which has been respected previously, and then it will start to fall. In that type of scenario, I will get the stop out, and it's a random level where the market can't reverse from there. So in that type of scenario, there is no need to take the buy. Instead, let the market go, clear some liquidity so that you can frame the sell. If it doesn't do that, here, look, you also don't have any SMT, unfortunately. Okay, unfortunately, you also don't have any SMT. Maybe you could use the SMT to frame the sell. Also, you don't have that SMT as well. So here, this market will keep falling. You will keep watching. No, but I'm not going to do that. I'm going to chase the market. I promise you, if you chase the market today, you will get the profit. But rest of the days, day after day, day after day, day after day, you will take the loss. Keep taking the loss because this is the trap market makers sometimes do, where without clearing the liquidity, we called it falling knife. Don't touch the falling knife. Liquidity is not cleared, no sell is valid. Liquidity has cleared. I am already in a sell from here for this sell side liquidity. Brother, you can take that sell over here, and until here it's kind of 36 handle. So it has, you already got 36 handle. Trust me, man, that is a bad habit that will lead you to unlimited loss. In other days you will be able to see that it will just tap to this gap, fall a bit, late fall, and then go above this gap, cleared the liquidity, then started to fall, and it will break you down into pieces. You don't believe me, go for that. But as I told you, even though we know that what is going to happen, it is clear to all of us that what is going to happen, but we should not do anything over here without letting this market go. You can say that, brother, this is my money, this is my choice. It's up to you, brother. I don't have any objection with that. I'm just trying to show you how you are going to work with this market, how you are going to predict, how you should wait for the setup. Trust me, you are going to be very happy today because you are catching that sell. Next 3 days, you will just come with the information, I blow the account, I blow the account, I blow the account. It's not the market's fault. It's the fault of your bad habit. This is the this is the bad habit, okay? So please try to understand. I knew that what is going to happen. I explained you, all of you, how it is going to happen. Still, I'm not touching this market. I tried a buy here, which is a logical level. This is a very logical level. First of all, this is the last fair value gap. Secondly, this is the, I mean, that area was the quadrant level from the opening gap, which I removed actually. All of these things was given me the confidence to take the buy. I wanted to take the buy from the order block, which is too far. That's why I tried to take the buy from this inverse gap. Didn't work. I got a 20 handle loss. It doesn't mean that I'm going to chase the market or it's going to take the sell side liquidity. I knew what is going to happen. You knew what is going to happen. Market didn't give you the opportunity. Don't touch it. Don't touch it. Don't build the bad habit, please. I have knife catching gloves. I'll be okay. Sure, man. That things blow my many accounts. Brother, it's time to overcome. Absolutely, brother. Just to wait. You know what is going to happen. You have to wait just. Nothing else. Hey, man. How are you, Aziz? Without buy side liquidity taken, I will not touch this market even if it cleared this sell side liquidity. After clearing this sell side liquidity, I will start to look for the buying opportunity from any kind of fair value gap below this sell side liquidity. Okay, I'll see that actually. I think here somewhere the sell side. We'll see that later. And this is called falling knife. Don't touch this falling knife. So the screenshot I gave you yesterday, all of these things you saw, you're seeing this is the quadrant level 50%, all of the area. I came to this decision that it will go first for this fair value gap, which was extreme. As I explained you this gap over here, I just took the extreme area that it will come here, then 24886.75, that is the maximum line it can come. 24886.75, just keep that in your mind. It will fall until that area, then it will go higher for those buy side liquidity. It will go first here, then it will fall, then it will go higher. This is how this market is going to work. But unfortunately, I was not able to catch that sell because the way this market fall, I'm not able to catch it. So I'll let this go to find a buying opportunity. The whole day I will not get the opportunity. No worries, I'll be back tomorrow. Is there anyone who was with me from the beginning? Yeah, I know that, brother. Khurshid, I know that there is a daily bullish fair value gap. I know that, brother. See this gap here, this box here, this box. This is the daily bullish fair value gap. I know there is daily bullish fair value gap. I marked it in a very intentional way. If when it will come here, I'll show that why it should come around this area, not this bullish fair value gap. I'll show that, okay, when the market will come here. It doesn't mean that it's going to happen by today. So maybe today's job is that sell side liquidity over here. That sell side liquidity is today's job. Then market will stop here to this daily bullish fair value gap by today. Tomorrow it will fall again. Then it will, the day after tomorrow maybe it will start to go higher. This is how, not by today. It's not going to happen by today. This is the whole weekly plan by one screenshot from 15-minute chart. How this market is going to work exactly or precisely. This is how this is going to work. Wow, what a beautiful support. See, this is the one of the best beautiful support. Just let me remove this. Look at this support. This low came here, tap here. How beautifully market has been rejected from there. Rejected. Come back again to this zone. How beautifully it has been rejected. Made sell side liquidity relatively equal lows over here. See this sell side liquidity over here. Come until there, a very precise fair value gap. Respected the high of this gap. Fall dramatically. Fall, go through this last fair value gap, clear this sell side liquidity, come back again to this sell side liquidity or that support zone, reacting from there. I'm in 1 minute chart. I'm a retail trader. I'm going to take the buy after seeing this buy, that bull candle, because I know that previously I've missed that buying opportunity from here. I missed the buy here, missed the buy here, so I'm not going to miss this time. I'm going to take the buy. This market will go higher a bit, clear some swing high, will fall dramatically to take that sell side liquidity. That is the last opportunity for me to catch this sell. Still have to take some swing high before falling to make them much more full. If it doesn't do that, what will happen? It will fall, use this as a resistance. It will fall a bit more to go higher again. Like here, this is the area. I'm expecting it will fall until around this area, okay, here somewhere, but not directly by today, by tomorrow, by the day after tomorrow, like that way. See here, I'm taking the buy from this support zone. Here, buy, target, here, target, target, target. It will do, go a bit higher, fall. If it happens, I will enter. If it doesn't happen, without clearing the buy side liquidity, it will keep falling. I'm not going to attend to this party. I'll just let this go. So I want to be a retail trader first here. I want to see this market will go higher first. take some liquidity to give me the selling opportunity. Didn't work, didn't touch it. Let it fall, clear that sell side liquidity. I knew it is going to clear that. I was not able to enter into this market. Do you see what is the reason? Is that reason valid to you or not? Do you really think that we should enter here where we are seeing the swing highs, all the highs, not even a single swing high has been cleared? Should we participate in this price action? Time to go for the daily chart. Mark this gap. Remember at the beginning I showed you this gap here, that gap. Actually, let me show you why I'm expecting this market will come until this area. This is that whole zone. See this zone? Just remember this 50%. I'm just going to mark a line over there, and it's gonna be a red line, okay? So that is that daily range. That range 50% is over here. Yeah, of course I have this fair value cap over here. I want to see a wick will come here. Same over here, the way I was expecting it will go a bit higher. At least a wick will come here, then it will fall. However, you can start to reverse from there. There is nothing wrong. If it happens, that is the best case of scenario. From the 4-hour chart, this inverse gap over here, that inverse gap exactly aligned with that, what to say, I mean, kind of that bullish fair value gap from the 4-hour inverse gap. If it reverses from there, I don't have any problem. I'm more interested for that lowest down close body close candle opening price, which is aligned with this line from the daily chart. If I go to the daily chart, that is the lowest down close body close candle, which has traded some kind of fair value gap over here from the weekly chart. Weekly chart, you can take it. That opening price where the whole week is the order block. So this candle close above this order block, that candle trade the week and then keep going higher. Perfect. Failed to clear the buy side liquidity, instead build the liquidity. Now it's falling. I'm more interested to see it will trade at least the opening price of that candle, which is here 25, sorry, that line is 250996, I guess, 25996, I guess. So here 996 and the 50%, this is the zone I want to see this market will trade. So to that specific screenshot, here you are seeing 886.75, 886.75, and here this is that 886.75. I just marked it randomly, so you are seeing it different. But if I just use the fib, see this 50%, fib there should be. So here, look, 886.75. It should be 886.75. I think I have messed up with some levels over here. Maybe this time, that time I marked that high. That's why it's showing 886. But however, this is that area where I'm expecting this market will precisely come. 887.75 plus 966.75. So in between these two lines, market will fall and then it will start to go higher. That's why I'm more precise about this area, not for this daily bullish fair value gap. If it reverses from this daily bullish fair value gap, I really respect that and I don't have any problem with that. But I will accept this market to fall until that area. We'll be back in 1 minute chart. Sell side liquidity has been cleared. More interested to take the buy right now? Any kind, any time market will give me the buying opportunity, I'll go for that buy. Now sell is gone. I'm not interested to take any kind of sell anymore. Only buy is valid. It is falling. I'm not getting worried about that because I know there is the order block open and this is the daily range 50% where this market can fall until that area before giving me the buying opportunity. It doesn't mean that I will wait until here to take the buy. That is the maximum fall. Any kind of buying opportunity right now, I'm more interested to catch that buy. As this is the daily bullish fair value gap, I can't use the order block here from 1 minute chart. I have to wait for a 50-minute order block to be created here, which is too far for me. So I'll try to look for a 22 YT model over here, catch the buy for this smaller buy side liquidity here. This high has been cleared over here, shallow run. I would love to see this buy side liquidity at first, and then this buy side liquidity. You can see this high, that high is lower than that high. Another buy side liquidity, just not going to mark them, but that's gonna be my target now. No more sell is valid to me. Always wait only to take the buy right now. But if it keep falling, you already know that how far it can fall and why it is falling for that. Is that falling for keep falling, keep falling, keep falling? No, it's falling for trading this area for going higher. Of course, it can keep falling, and if it come here, of course, I'm bearish. I'm not bullish anymore. But so far, I'm not bearish. I'm bullish now. After clearing that obvious sell side liquidity to be cleared first and trade this specific gap, which should be traded. Now, any kind of buying opportunity, I'll try to catch that buy. I prefer the 22 YT model over here to catch the buy because that's the most reliable model to catch. What happened to yes? What happened RB to yes 6805 buy 805 by 65. Gonna take the buy here. If I point on okay, yeah, 6805 is your buy. Where is your stop loss? I would love to see that. By the way, I'm expecting the market will go higher now. However, it's already done, bro. What did you say? 6805. It didn't come here at all. Actually, it didn't come here. This is that 6805. It didn't come here, brother. How can it already done? I don't know what you are talking about. It also didn't give you the entry. So now no sell is valid. I'm not worried about any kind of sell now. Any kind of buying opportunity now is my buy, is my solid buy. Okay. So what kind of buy I am looking for? Either to fair value gap or 22 YT model. The best reliable model is 22 YT model. I'm more interested to see the 22 YT model. But if it build the two fair value gap, that's gonna be my another opportunity. So let's see if it can build the two fair value gap or not. This will work as a breakaway gap. Breakaway gap, okay. Whole range is this high. No, brother, that didn't give us the buy. That market didn't fall there, brother, unfortunately. Okay, so if it break another gap, that's gonna be my first buy. So all of we knew that how it is going to work and why it is going to work, why this market is going to fall first, from where it is going to fall first. That's gonna be the buy from here. Stop loss is going to be like it should be below this gap, below this low, which is not possible, right? Because it's too far. The next logical level is here, which is still that is too much. You can see 42 handle. So I will keep the stop loss over here just below the breakaway gap. You don't need to do that. If you think it's a huge stop loss, don't take it. But I'm interested to catch the risk here. If I get stopped out, I'm cool with that. Until this low is not taken, market will go above this gap again. I'll take the re-entry because I know it can stop me out over here. Now I just need the confirmation that it's not going to stop. I mean, sorry, it's actually leaving that area for trailing the stop loss. However, from the entry here, I would love to go for the partial around 1:1. Remember, I had a loss of 22 handle previously. Okay, so I will try to take a partial here, 30 handles, something like that, or like a bit higher, because I know where the market is coming for. At least this buy side liquidity, then that buy side liquidity. Okay, so all of this area is now my target. Just go for 1:1 partial, something like here, 1:1 partial, stop loss to the break even, and target maybe this buy side liquidity, just that buy side liquidity, 77 handle is more than enough for being profitable. So all the loss I have taken here for the first time, 22 handle. If I close the trade right now, the full trade, I'm going to close it. Okay, the full trade, no partial, nothing. Still, I will get 30 handle, which is going to cover my loss here, 22 handle loss, plus 8 handle profit. I don't need to worry about that small loss because I know what I'm doing. Exactly, I know that what I'm doing. There is no confusion. There is no kind of what to say. I mean, the worrying. I'm very much worried about this market is falling, so I'll take the buy. When I should look for the buy, how I will look for the buy, how long I will look for the sell, why I will look for the sell until that area. Any kind of confusion here. I don't have any kind of confusion over here because I know what I'm doing. You have to know that what you are doing. All of this sell, I could catch it if it could take that high. I would be in this sell for the sell side liquidity and until to the top of this daily gap. I'm expect it can maximum fall here, doesn't mean that it will be here. It come until this area, give me two fair value gap. I would love to take the buy from the first fair value gap. We'll take some partial around 1:1. We'll put my stop loss to the break even. We'll let the market go until it would love to go. For me, the most obvious level is this high. So it should at least clear for the first time today this high, this high as a buy side liquidity, even if it would love to fall for this area. I just don't need to worry about anything else. I have to wait for that opportunity. Best 22 IT model or at least two fair value gap. This one is going to work as a breakaway gap. This one is going to work as a entry gap. Take the entry from here, take partial, either put the stop loss to the break even or keep it stop loss over here, whatever you want to do. Take the partial, get stopped out to the break even, be happy with that. Okay, I want to go for another trade. No worries, wait for the order block to take the buy again until the liquidity, obvious liquidity is not going to be cleared. Wait for the order block to take buy again. Keep looking for the buying opportunity until it's not taking the liquidity. Keep looking for the buying opportunity. This is the lowest down close body close candle so far, which is an order block. Until a swing high is not cleared, don't think about this low to be taken, because this low is a low that is holding, the market is holding this is the base of this low. So I took the buy here. That was a run for like 36 handle. Maybe I caught 25 handle, just think like that. 12 to 25 handle I got. Perfect. After clearing, maybe I put the stop loss. I didn't put the stop loss. Stop loss is here, covering this breakaway gap. You're going to get the boom. Perfect. You got stopped out to the break even. Don't worry. Wait for the order block to take re-entry for that swing high. So you have to know what you are doing. Just market is falling, take the sell. Going higher, take the buy. Don't do that. Wait for the perfection and then go for the trade. You have to know that what you are doing. Until you are not doing going to understand what you are doing, you are gambling. Just try to understand that small piece of information. You have to understand what you are doing. What did I say? You got stopped out here. Wait for the order block to be created to take re-entry for this buy side liquidity. You didn't get stopped out because your stop loss is still here, which I don't support. You are still in this trade. You are going to get that big boom. Perfect. Wait for that. My request, you have to understand what you are doing. it go below this low over here, then frame another buying opportunity above this new opening gap, go for the buy again. If it take that low, means all of these PDRS are not important anymore to take entry. If it is taken this low, if it doesn't take this low, maybe come until here, trade at the quarter level of that week, new buying opportunity from there, or wait for this candle to close above this entry gap to take re-entry. Until this high, at least a buy side liquidity, some buy side liquidity is not taken. Okay? Until some buy side liquidity is not taken. So it didn't close below, go below this low. Until now, this is the lowest down close body close candle. Observe this candle as an order block. So it will close above this order block, one tick. It's a valid buy from that order block until this high. What is the range? Here to here, another 44 handle. But if it is started to fall, you will let this fall go, because there is no need for this market to fall. There is no need this market to fall again. It should keep going higher. By the way, his buy, whatever his buy, it didn't give his buy yet. Fall, clear some sell side liquidity, some sell side liquidity. This is the breakaway gap. Still, this is the breakaway gap. Still, this is the lowest down close body close candle. There on is the lowest down close body close candle. Nobody has closed below this candle low. Liquidity has been cleared. Traded that breakaway gap top. Closed above this line. We'll go for that buy. I don't need to worry about this candle anymore. This is the candle which is my order block. It will close one tick above this order block. That is my buy from here for this buy side liquidity. But brother, there is a bearish gap. I don't care about that bearish gap. This gap. It's my adding. I will add more over here. If I get the opportunity, I'll add more while this market will close above this gap. First entry from this order block. Sorry. Order block. So it will close above this order block. That's gonna be my buying opportunity. But brother, I didn't get the opportunity to. Market didn't give me the entry. Bad luck. But you didn't take the sell here. That is the important part. You didn't take the sell here because you know this market is not going to fall. It fall for to take this low over here, build the order block, going to take the buy from this order block, target this buy side liquidity. But brother, market didn't give me the entry, unfortunately. It's your bad luck, just your bad luck. This time you got the entry, this time you didn't get the entry, but you knew that I'm not going to take the sell. This is not a falling market. Why this market is falling? Just to take some low before going for this high. It should go for that. Can it keep falling? Of course it could keep falling. In that type of situation, we wouldn't go for the re-entry. We are going to take the buy, waiting for the buy. Are you getting my point, guys? Are you getting the point, guys? Please, I need my reply, otherwise I'm just talking to myself. Thank you, Jeffrey. This is called bad luck. That means market didn't give me the entry. Okay, no problem. Look for the last fair value gap. Unfortunately, I don't have any. If I had the last fair value gap over here, that could be my rebuy. Did I know that market is going higher? My question to you. Did I know that market is going higher? Was that everything? Now, I'm not trying to show you how to chase the market. After closing this candle, I could say that, okay, it's falling. Take the buy. Okay, this is the consecutive order block. No, it didn't give you the entry. You are not going to take the entry. It gave you the entry. You are going to take the entry. I'm not trying to show you how to chase the market. I didn't show you the sell here, which is called chasing market. I'm not showing you to take buy here, which is chasing market. Even I know that it is going to clear that high. All of this price, I am saying that it has to clear at least one of this high. It doesn't mean that I'm going to chase the market. I could take another entry if I had the last fair gap here. This is called bad luck. December is going to happen like that way. But on February, you are not going to miss this buy. Trust me, man. It will give you the entry. This is going to be your target or partial. You are going to hold your trade for this buy side liquidity. And then by trailing stop loss, either you will get stopped out after reacting from here, or maybe you will get your biggest boom. This whole thing is a piece of cake. This whole price action is a piece of cake. You knew it, how it is going to work. Entry here. Now talk about these guys. For example, some of you took the entry here. You kept your stop loss for 26 handle. So after clearing 26 handle partial, just for the sake of this conversion, the way you see the social media, you take the partial here, or maybe you hold the trade here. Did you ever get stopped out? The way it should work, did it work like that way? Everything is perfect over here. Every single thing is perfect. Okay, I didn't do that. I took the partial here, 28 handle. I took the partial here, and then I moved my stop loss to the break even. I got stopped out to the break even. That is the re-entry opportunity, not sell. This is not a selling market. This is a bullish market. Market is going for the buy side liquidity. It's not a bearish market anymore. It was a bearish market until where? Until there. It will come here, there, then this is the real market direction. That is the real direction that you are seeing. From where? From this gap. From this gap. Why I marked it? That is the maximum line it can fall. That is the maximum line it could go. Best is from here. That is the best. Best from here. That is the best. Maximum it can fall until here. Very precisely until here. That is the maximum line. That is the maximum line. It came here to this line exactly, then trade this bullish fair value gap. Now it is going for where? Buy side liquidity. There's two buy side liquidity actually. Buy side liquidity, buy side liquidity. This is a very predetermined market. It's not something you will get confused. Why it is going higher? Why it is falling, brother? What is happening? No, no, nothing, man. So that is whatever it is. Okay, so we have taken a losing trade. We have taken a winning trade. So think like we are in at the break even. After knowing that it is going to fall, it is going to go higher now. Where? Is it going to here and then it will start to fall? I don't think so. It will come here, then it will fall? I don't think so. It will come here, then it will fall? Maybe. Maybe. Until this buy side liquidity, I'm now bullish. Is it going to happen by today? I don't think so. And it doesn't need to be by today. That fall, that didn't give me the entry. All of this fall didn't give me the entry. Nothing, nothing, nothing. That buy has given me the entry. Okay, I got the partial. Next time I didn't get the opportunity. It's a bad luck. But I knew what is going to happen. If you know that, and then if you work like the way I'm working, man, this pleasant, this happiness, you will never be able to compare. I could go for that buy, trust me, if there was a last fair value gap. Unfortunately, there was no last fair value gap. I was not able to catch that run just because I didn't have the last fair value gap. It didn't give me the entry over here. I don't give a shit. I know how to use this area for the last fair value gap to take that buy. Unfortunately, I had no, I didn't take. No problem. We'll see if it can provide me another opportunity or not. Buy side has been cleared. I'm now interested to look for this low, which has cleared that low over here, here, here. Now here, if this market fall for this area, this deep discounted area, that is the best area to take the buy. Why? Because it has cleared the buy side liquidity over here. It's in deep premium area. From deep premium to deep discount is acceptable. If it starts to reverse from here, that is also acceptable. I will let this market to go without taking the buy from here. It's called chasing market. Liquidity has been cleared. Any kind of pushing button over here is called chasing market. I'm not interested to chase the market. I want this market to fall for this deep discounted area at first here, and then it will start to go higher again. If it happens, I'm interested to catch the run from here. If it doesn't happen, I will let this market to go above this buy side liquidity, then this buy side liquidity, all of this area without clearing the liquidity. What else can happen? Maybe it will go higher, okay? It will go higher, very near to this high, here somewhere. Then it will fall to clear some sell side liquidity. Whatever swing low it is going to leave over here. That is another opportunity to take the buy from here. If it go higher, build the liquidity, fall to clear the sell side liquidity. Same here. It fall, made a swing high, sorry, not there, here. It fall, made a swing high, fall again, go higher, clear that high, then give me the fall. If it could happen, I could go for that sell. Liquidity to be taken before taking the sell. Liquidity to be taken before taking the buy and leaving the liquidity, because this liquidity is too far. This is too far from the market, so I'm not interested to catch that liquidity for today. I want to say it will keep engineering the buy side liquidity and it will keep falling to take the sell side liquidity before going to take that buy side liquidity. If it works like that way, I'll touch it. If it doesn't, I'll not touch it. I know what I'm doing. Do you know that? You know that? Congratulations, brother. You're learning. Otherwise, this is gonna be always the mystery to you, how this market actually moving, or at least booking one to another price. The thing I told you here, the whole market, did it work like that way? Exactly like that way or not? This is why I'm saying, you are seeing this screenshot, it takes like 1 minute, but to come to this decision, it takes almost 20 to 30 minutes for me to come to this decision. This market is going to work like that way. It takes 20 to 30 minutes just to come to this decision, to mark this three line, 1 2 3. To mark this three line, it took me almost 20 to 30 minutes just to mark three line, man. Come on. And you are seeing the same thing over here. Thing you saw, that was the screenshot from here, here until here, maximum, best here, that is the best, maximum, until here, maximum, best from here, reversal. For what? Buy side, buy side. It's not gonna be a single line. It's also going to be broken like this way. It's also gonna be broken like that way, okay? Like this way. This is the way it is going for that buy side liquidity. It's not gonna be a simple line. I need to see some liquidity to be taken at first. Sell side liquidity. For a new buy side liquidity, which is over here. Without taking the liquidity, if it go for that buy side liquidity, I'll let this go. Sell side liquidity has been cleared. Another buying opportunity from there. It was in rush, didn't give me the entry. Please, guys, take this point. Just this information will make you profitable. Just maybe you will not get any entry sometimes you'll miss the trade, but most of the times you are going to be profitable if you just follow the things I'm trying to show you here. Is it hard, guys? Boom, thank you. Jaro, thank you, man. Jaka, thank you, man. 1020 is the breaker. 1020 is the breaker. I don't see any breaker over there, brother. I have no breaker yet. Mark from here to here. What it left? Buy side liquidity. It left the buy side liquidity. I want it to come here to this deep discounted area, very deep discounted area, before going higher to clear that buy side liquidity. So when I'm seeing this fall, I'm waiting to take a buy. you can break it into small pieces. From 1 minute chart, I'm expecting this market will come to this line, right? To this deep discounted area. It will come here. So what you will do, you'll go to your 15-second chart and you will try to find a sell from 15-second chart from here to until this area by marking some sell side liquidity. If you see from 15-second chart, there is some kind of sell side liquidity. I don't know actually, do I have any or not? If I had some sell side liquidity here, and then the 15-second chart gave me any selling opportunity from 1 minute chart, you know that it is coming for this deep discounted area right here. It is coming over there. From 15-second chart, you have framed a sell from there, which is a very obvious level, and from there you look for the sell until where? Until this area. If you have some sell liquidity after clearing some partial, when it will come here, you are done with your selling. You will start to look for a buying opportunity for this buy side liquidity over here, that buy side liquidity market left over here. This is all from going to happen from the 15-second chart. So here you will take the sell, you'll cover some partial here, you'll go for that maximum target by putting your stop loss over there. And if you get stopped out, no need to worry about that. You know that, okay, market has traded the 50%. It doesn't need to go to this deep discounted. If it could go over there, that could be the beautiful area because it went to the deep discounted. If you get stopped out, that means above this highs, market has already going, already it has gone. Until then, of course, you are bearish, right? All of these gaps, you are going to use them as a bearish opportunity to take the sell for this area. It's all the candles you are seeing, you are waiting for taking a sell. But if it could go above these highs without coming here, then is it logical? Of course, it has traded the equilibrium, went below this equilibrium, then it went higher. So there the selling opportunity right now is valid from 15-second chart, because from 15-second chart you will be able to put your stop loss smaller, you will be able to target smaller. Maybe 15-20 handle, something like that. You'll be able to frame the sell for 15-20 handle, something like that. But from 1 minute chart, for example, I would love to frame this sell. What I have to do, I have to take frame here, stop loss. Where is the most logical level is also here, above this side. This is the most logical level from 1 minute chart. And target is gonna be this deep discounted, which is 38 handle. Even I can't go for 1:1. Best area to put it here, which is nearly impossible for me to go for that trade. So I'm not framing the sell here. Even I'm expecting it will come here. I'm not framing it here. Instead of that, I'm letting this go because I'm not going to 15-second chart. I'm letting this go and we'll try to frame the buy from there. If it happens, I'll try to take the buy from there. So I know what I'm waiting for. I know what I'm going to implement for and when I'm going to do that. Is that clear, guys? Keep watching how it is going to work, okay? You have the information in your mind that this market came until here, now it is rejecting, market is falling for this low or maybe all of this low. That is the information you have in your mind, and I'm seeing that this market fall cleared all the major liquidity. The major liquidity has been cleared, traded the upper portion of the daily bullish fair value gap, and I believe that I will find something here from the 15-minute chart as well. Let me check. I'll find something for sure. Any of this fair value gap has been traded. So if I mark it from here until here, I'll be able to see that maybe something has been traded over there. Traded that area 50% perfectly here from 15-minute chart, came here, there, went higher, perfectly come here, respected that 50%, because those people who are the fake breakout, they would love to see that fake breakout trader. Remember, the sell side liquidity is going to turn into the buy side liquidity, support is going to turn into the resistance. Let me mark these things actually to you. You'll understand then what I mean. This is that sell side liquidity, remember? With this low, and that low, relatively equal lows. So I'm going to mark it as a red line. Coming 1 minute chart, this is that sell side liquidity, old sell side liquidity. Going to mark it into 4. Came here, took the sell, people took the sell, fall, They thought, okay, it went below this low, so it's a bearish market now. It is going to fall, keep falling. Went through that. So all the people who took the sell from this area, breakout trader, they got stopped out over here. After stopping them out, it is going to come back again, traded that old area or the old sell side liquidity working as a support, will fall one more time, then it will start to go higher. This is how it should work. Now let's wait to see how it is going to react. Okay, so I'm saying this is a buying opportunity. It doesn't need to come over here, but if it come here, that is the best case of scenario to frame the buying opportunity. So after seeing these two candle, I'm not going to think that it's a bearish market, and I'm not going to jump into a sell trade over here. After seeing all of this fall, I'm not going to jump into a sell. But if you go to your 15-second chart, you will be able to find a selling opportunity at least until to this area, to this zone, before going higher again. This buy side liquidity is gonna be my next target. More importantly, that buy side liquidity. Am I going to frame the buy here? Of course not. Until it is not broken, I am pretty much confident this is coming here, around here, until this gap is not broken. So I will wait to see how this gap is going to hold the market and sending it to this deep discounted area before going higher. Or if it failed to come here and closed above this gap, that's my buying opportunity again from this gap. From this gap, okay? Yes, have a look. হ্যাঁ, কখন লাগবে? আচ্ছা, আমি তোমাকে আধা ঘন্টা পরে দিতে পারবো। Am I talking to myself or you guys are listening to me? And is the point is going to be clear to you or is it confusing to you? So when I'm waiting, people keep saying, right, one word, you keep listening. One word, you always keep listening. Wait for the perfect setup. Is that making sense to you? How you are waiting for your setup? You know what is going to happen, so you are just waiting for that. You know what is going to happen, you are just waiting for that. After seeing this fall, you are not going to think that this is a market for this bearish for that low. Of course it can go for that, but you are not expecting this is going to happen. It is going to take that low because this is the origin low. It should not be taken. So when it is falling, you know that it's coming to the deep discounted area because according to the premium and discount logic, it has cleared the buy side liquidity. Now it should go for the deep discounted area to prove the sellers, all the people who actually tried to take the sell or whatever they have traded, prove them I'm bearish. When it will come here, it will start to go higher again. For those people who took the sell here by thinking, oh wow, now the bearish market retracement is done, market is going to fall again. I'm going to take the sell. I have missed all the sell there. So I'm going to take the sell here from the new resistance level. I'm going to take the sell. So those people are believing that wow, this is a bearish market, and when it will fall, every single time it will take a swing low, they will add more. Every single time they will see a swing low has been cleared, they will add more. And when the three pattern or three drive pattern, one, two, three drive pattern will happen, wow, this market will boom for that buy side liquidity. That is the best case of scenario. It doesn't need to come here. If it doesn't come here, it will close above this gap. That's my new buying opportunity from there, because the last gap here, the reclaimed gap is going to perform what the way it should work. So all of this price is gonna be cut through the candle. First, I'm expecting this market will come here, all of this unfinished business, and then it will go higher. I'm waiting and I know what I'm waiting for. I know that what I am waiting for. This is the most important thing of trading. You have to know what you are waiting for. You can't just simply push the button. It's very difficult, brother. For and in the chat, okay, so when the some new people will join, they will start to give me the lot of advice. Please don't focus over here. You can read them, but don't start to judge me depending on these comments, because maybe you have joined me later, or maybe you didn't know that what I am waiting for. So please be careful about that, okay? Before judging, first listen everything what I told, and then start to judge me. I don't have any problem. See this SMT here. This low has been cleared over here. See this SMT over here, here, and here. You got the market structure shift over there. See this market structure shift over there. First thing I want to see body close above this gap. If the body can close above this gap, I got 22 YT model with the SMT with the extra confirmation of the reclaimed gap. So I have 3 PDRA. Even though I don't have the higher time frame PDRA, for example, here we have the new week opening gap. I'm just skipping this new week opening gap. Think like there is no new week opening gap. Even though I don't have any higher time frame PDRA, I have 3 PDRA that is going to confirm that I'm bullish. One, SMT, second, 22 YT model, third, reclaimed gap or the inverse gap. You can see the both highs are around the same level. So you can use it as inverse gap or the reclaimed gap. Up to you. I don't have any problem. So 3 PDRA has confirmed I'm bullish. I'm interested to catch the buy either from 22 YT model or from the inverse gap or from the reclaimed gap. Whatever you prefer, you are going to catch that buy depending on that, by believing that no, it's not coming to the deep discounted area or this unfinished business. Instead of that, it is going higher. I just simply can't push the button because I'm thinking about a fall, so I'm going to take the sell. No, I can't do that. Or I'm looking for a buy right now, I'll push the button. No, I can't do that. So those people who started to think that this is a bearish market, what happened to them? To understand why it's not going to work, why this market is not reacting from here, because you know that the job is done here and market has perfectly traded a beautiful area. It will close one tick above this gap. That's my buying opportunity. From here, by believing that body is not going to close below the, sorry, body can close below the reclaimed gap, but the lowest down close body close candle is not going to be the, what to say, I mean the it's not going to be broken. The lowest down close body close candle that has traded this gap, whatever it is, even though I'm not able to put it over here, so what I will do, I'll just cover the 50% by believing that the 50% is going to be respected and market will go higher because of the volatility. Either I will do that or I'll let this market go. I'm not interested to catch that run. It will tap here. I'll take the buy. We'll take a partial here above these highs. Above these highs, 21 handle. We'll go for the 1:1 until to the top of this gap, and then we'll hold the trade for this buy side liquid over here. So I will wait for the entry over here. Stop loss below this candle. Even though I know that my stop loss has to be here, I will take the risk here because the volatility is telling me I can maximum take that risk. 26 handle, I can take that risk. So I'll take that risk. We'll go for the trade from here. Okay. It'll take a bit time to load, and this is gonna be my 1:1 partial. Stop loss below this concurrent crossband, we can did the damage, so that's why I just put it a bit below. Okay, just a bit below of this concurrent crossband because we can did the damage. Partial over here, 1:1 around here, by thinking this buy side liquidity is going to be clear. So market doesn't need to come here. market can simply clear that buy side liquidity, can reverse. But as my bias is bullish, I'm expecting this market is coming here. I will try to take that risk that market, even if it would love to reverse, it is going to reverse from the top of the fair value gap. Constant encroachment rejection, either low rejection or top rejection. As I'm expecting it is coming for this buy side liquidity, so I'm not expecting the lower rejection of this gap. Instead of that, would love to see the higher rejection of that gap. So market is going to at least going for the high and then it will reverse. But if it cleared that liquidity and then reverse, nothing wrong, man. Absolutely perfect. I'm just trying to catch the big run until the most obvious level. Until there, I'm just trying to catch it. Lowest down close body close candle is your order block. So from the opening until the high, the whole block is the order block. After seeing this, you are getting very afraid. Wow, it's a bearish market. No, sir. It came here to build a new buy side liquidity. After building a new buy side liquidity, if it fall, it can maximum fall for this low, which we have seen before. Market fall, cleared that low as a liquidity, then it went higher. So yeah, of course it can fall to take this low one more time to trade the constant crossment so perfectly, then stopped them out. Those people who took the sell over here, relatively equal highs. That is why I told that my stop loss is very tight. I could get stopped out over here because my stop loss should be below this low over here. As I'm not able to do that because it's too far from my entry point, I will try to cover the stop loss over here. If I get stopped out, I'll try to take re-entry. As the constant crossband is over here, we'll believe that it's going to hold the market, sending it higher. If these highs are taken over here, I would never hold the trade until here. I would move the stop loss below that candle. In that case of scenario, maybe I would get stopped out over here. Just keep watching this new buy side liquidity over here. Okay, so I'm going to remove this line and going to kept the buy side liquidity on my chart only here. Buy side. This is my interest to see to be taken first. It has cleared that sell side liquidity over here. That low has been cleared. Should start to go higher now. I'll put it a bit below actually here, because just covering this what to say, I mean the new week opening gaps, high 50% and the low, just covering them because it can fall for this gap first before going higher. Either way, we'll wait for the re-entry opportunity if it can close. Only thing here is so impossible for me to cover the whole zone. I'm not able to cover the zone, so what I can do, I can take re-entry, but not able to put the stop loss below this low, because if I'm wrong, by anyhow this market is not interested for this buy side liquidity. Instead of that, it would love to take that sell side liquidity, come here first. In that type of scenario, I will get a huge loss, so I don't want to take that huge loss. Instead of that, we'll go for a smaller. If I get a stopped out, I'll take re-entry, because either way my loss is gonna be mitigated or I will get better profit. But if I'm wrong and get that huge loss, man, in that type situation, I'm dumb. One trade, I'm dumb. Even if there is an opportunity, I won't be able to catch that run. So if it wants to fall, trade this gap first before clearing this buy side liquidity. I'll frame my next buy opportunity from here around this area. If it doesn't want to come here, closed above this gap again, I'll take the re-entry over here by covering the lowest down close body close candle as my stop loss by thinking partial, and the target is here, that buy side liquidity. I was just afraid of the new week opening gap or the old week opening gap where I actually got stopped out. You can see that my stop loss didn't cover that low, I guess. Let me check it. Yeah, that is the low. I should have covered that low. Unfortunately, I thought that I have covered that low. I didn't cover that low. This is the low of the new week opening gap or the old week opening gap over here. It has traded the top 50%, failed to trade the low of that old week opening gap. It can start to go higher now. So when I moved my stop loss, I was trying to cover that low, this low, just that low by one or two ticks, something like that. Unfortunately, I put it here and it just took me and then started to go higher. I just didn't notice that I didn't cover the low. Thought that I have covered that low. However, this candle will close. I have to enter into the market. I can't wait for this market to come here take me before going higher. My mistake was here, just I was failed to cover that low of that old week opening gap. It was not over here, so I thought I have covered it, but unfortunately I didn't cover it. Here the problem is I can't take the entry over here as it is too far from here. If it could close here somewhere, I could take the buy over there. Or maybe if it close here then fall a bit, I could take the buy over here. As I have missed both of them, I will wait for a fair value gap over here to take my buy right now. Any kind of fair value gap. How long? Until this buy side liquidity. The thing you saw me to get stopped out, it's because I was not able to cover the zone. Okay, at least the low of this new week opening gap. I was failed to cover the zone, but I was never confused about the fall or something like that. It could falling. It could falling. There's nothing wrong, but I was not thinking about that. I was thinking about this is going to happen. Unfortunately, it took me over here. Unfortunately. And if it doesn't give me the entry opportunity here, that is another bad luck. This happened on December a lot. This happened on December a lot. But on other times you will see more precision, and of course not this type of scenario where this is really so big stop loss. It's gonna be easier for us to frame the trade. I wouldn't get stopped out while I took the entry over here. I wouldn't get the stopped out over here. It will keep giving me the opportunities or the profit. I'll keep getting them. Unfortunately now this December is bit difficult, but still this is algorithmic price action. Just need to be more precious, I mean, sorry, what to say, the more conservative. I think that's the best word to say. Traded the world week, sorry, today, this week opening gap, new week opening gap 50%. Buy side is here, that is going to be taken. Market is next going for the next buy side liquidity. I don't have any. So for that is only the buy side liquidity. So until that buy side liquidity, I'll be bullish. And market didn't give me the entry from this gap, so I'm not able to take the buy from this gap as well because market is just going higher. I'm sorry for that stopped out, but as I told, this market can close below this consonant crossband, nothing wrong, but it should not go one tick below that candle, which is the lowest down close body close candle and the order block. So reclaimed gap. If it was the trap gap, I would never expect this one, but as it is the reclaimed gap, it can maximum trade the lowest down close body close candle or that candle. Okay, so before going higher. However, you can see the same thing repeated again. Build a low, went higher, fall by building the buy side liquidity, clear that low, swing low over here, then go higher, come back again to the same area, build the buy side liquidity, made a swing low, has been cleared that swing low, now took that buy side liquidity, going for that extreme buy side liquidity over here. Exactly the same thing. I was just not able to cover the stop loss. I was a bit late to cover the stop loss, the low of that old week opening gap over here. Otherwise, that could be a beautiful boom. However, guys, I hope that you guys got the point. Now, your job is either to let it go. There is a lot of way to trade this market. First of all, you don't need to push the button over here. If you see the entries over here, there is a lot of opportunity, okay? And you know that you are going to put your stop loss below that candle. So it's going to be 62 handle. You don't want to take that entry from there. So what else can you do? you can take the entry from the 50% to find out that, okay, maybe it will trade the 50%, then it will start to go higher. Sometimes you'll miss the trade. If you are okay with that, you can go for that. Still you see that, okay, no, it's not possible to take the entry from here. In that type of scenario, you can try to take the entry from the 50% of that order block, which is here. Of course, you will miss the trade. If you frame the trade from the order block 50%, you will miss the trade. However, or what else you can do, you can take the entry from the order block open, so which is here around the order block open, and by your stop loss can cover the 50% of that order block, which is also acceptable. So it depends on your system how you're going to frame your trade, or you can simply let this go, find out another opportunity to take the entry. But this market, as it is December, is still the way I explained this market. Tell me guys, was I ever confused about the run when I was seeing this fall? Was I ever confused that where it is reaching for and when it started to go higher? After seeing these candles or seeing that candles or seeing these candles, am I ever talk about a sell, or did I clearly tell that this low can't be taken? It's the origin low that is the base of this fall, of this run. This market is now going higher because your higher time frame has told you how this market is going to book the price from one level to another level. This high has cleared by that high. I'm already in a sell. This high, sorry, that high has been cleared by that high. I'm already in a sell until the sell side liquidity, more importantly to the top of this gap. Take the buy here. If I don't get the opportunity, we'll try to take the buy from the water block, buy from here, finally the buying opportunity here from there for this buy side liquidity. Not done yet. It should keep going higher. Second. This gap here, see this gap, it's a buying opportunity from this gap. I don't know how this worked. I'm just saying I'll mark this gap. I'll extend it to my right. Very specific gap. I really don't know what happened with this. First time market fall, cleared the liquidity, whatever liquidity it has, traded this area, closed above this gap. It's my buying opportunity. First time it will close above this gap. That's my buying opportunity. Just keep watching. I'm going to mark it and extend it to my right. Here, okay? Going to remove this gap. Just remember this gap. For the first time, it will close above this gap. It closed. I will count the candle. 1, 2, 3, 4, 5. Not immediate reaction. Not going to touch this market. Immediate reaction is something you have to observe it. Okay, no problem. I'm not interested to catch the run from this line because it didn't give me the immediate reaction. Second time, it has closed again above this gap. What I'm looking for, only buy. No sell is valid to me. 1, 2, 3. This 3 candle has validated this gap as the inverse gap. This is the candle which tapped to the gap top. 1, 2, 3. The third candle has given me the entry from to the top of this gap. Stop loss is going to be below this candle over here, which is nearly impossible for me because near about 40 candle. So we'll put it randomly a bit higher below the old weak opening gap over here, which is 20 candle. Just cover the 50% of this order block. Just cover the 50%. 27 handle is more than beautiful. Okay, I am bullish. This is the first partial. This is the second partial. The third run is here. There. This is your third run. Market is coming for. From this old gap. Random, right? Let me show you one more thing. Let me show you another example. Okay. Uh, Perfect. Yeah, perfect. This is a swing high. Previously, market has cleared here, over here. Still, it's not good example, but I'll try to be precise over here. Here it has cleared that high, and finally it has cleared that high over here. That is the high. Finally, this market has cleared. So I'll look for the last bullish fair value gap over here. Now, I can't see any bullish fair value gap around this area, so I'm not going to go for that leg. We'll come here back and we'll mark the last bullish fair value gap. Extend it to my right. If what I was looking for sell, remember at the beginning I was looking for sell. While this market has closed below this gap, I'd love to take the sell depending on the candles that has validated is as a inverse gap. Extend it to my right. For the first time, it has closed below this gap. Is my selling opportunity from this gap. Here, that's my selling opportunity. For the first time, it has closed. Tap to this gap. 1, 2. This 2 candle has validated this gap as an inverse gap. Stop loss has to be above here, which is nearly impossible for me. For the sake of 65 handle, we'll cover the mean threshold of that order block, which is still big. Maybe I'll put it here. Okay, so here, around here, 30 handle, without covering this in bearish gap. However, maybe I put it here, got stopped out around this area. Perfect. It closed here below this gap one more time after stopping me out. Closed below this gap again. Tap to this gap. Would love to take re-entry until this high is not been cleared. The candle high has validated this gap as inverse gap. I'm showing you the exact same thing what I do. Stop loss, sorry, should be here. Okay, where is going to be the stop loss? Still that 2 candle, because still here. Okay, so all of this thing has told us to put your stop loss over there, because you are not allowed to go for huge stop loss. Target for your sell side liquidity. I don't know what is your sell side liquidity over here. The same gap I showed you beforehand, I'm showing here. Every single time you'll go for that, I'll show you one more example randomly. Okay, it's a very random thing. So I can go for this high is not taken here, so I can't show you that. I can't show, yeah, I can't show you this. Look, this highs, okay, it highs has cleared over here. Then this market went higher, cleared some other highs over here. Not the extreme high, but some highs has been cleared over here. Highest bullish gap here. Extend it to your right. If you are looking for sell, right? Here, there. For the first time, look over here. This is that bullish gap. Bullish gap. So for the first time, it will close below this gap. Here, not even a single body has closed below this candle. It is inside the session. Closed here. 1, 2. The second candle has given you the entry opportunity. Stop loss above the candle or candles that has validated is it's as a inverse gap. Now you can see that this is the candle has the wick, and this candle opened above this gap and closed below this gap. This is the only candle that has validated this gap as inverse gap. Stop loss above this candle or maybe a bit above. Okay, target, if you have some sell side liquidity or whatever it is, how far it has given you. It has given you just 23 handle because it was a low volatility. You can see it's a low volatility, and after 350 it was a high volatility, whatever it is. Still, extend it to your right. The next day when it came here, how many times it has been respected? Just keep watching. Whenever it has been broken, how it has been respected. Okay, so finally it didn't respect here, and maybe to the right, I don't know. It's not random. I'll talk about this later. But right now, if you guys understand that why it was now bullish, now are you getting confused why it is bullish? Is there anyone who is confused why it was bearish, how long it was bearish, and why it is now bullish? Is there anyone who is confused about that? Ahmad, boom, took 75 points on that trade to SMC trader. Congratulations, brother, for your boom. Good morning, Gurdev. Good learning for me. Thanks. You're most welcome, MJF. I did get stopped out but re-entered quickly. Congratulations for your boom. Have a good day, friends. Time is up. No problem, brother. My question to you guys, I know that I talked too much today without framing the trade. I was just keep talking, but it was important for you guys because without knowing what you are doing, it's gambling. You have to understand what you are doing and how this market is going to book from one level to another level. Just you have to understand this whole factor. If you understand this factor, this trading is very easy. This is the December month. It's gonna be a bit difficult to trade, but from February it's gonna be a piece of cake, and you will be able to see that without me marking anything, you are able to mark everything. Wow, I know that how it is going to book from one level to another level. Give me some feedback, brother. Some good word to me. Don't trade after 11:30, please. Okay, I got 11.51% was bullish. Very okay, that's cool. Guys, please push the like button. I forgot about the likes. Please push the like button. What happened, guys? Now let's break down this market, okay? Let's break it down right now from here. This market came to this entry fair value gap from 15-minute chart, okay? This high has cleared the extreme buy side liquidity has been cleared and build a new buy side liquidity. See here, this high and that high buy side liquidity. Look at this. This is a selling opportunity. Don't go for that because this is not the time for trading. But look, this is a selling opportunity. How we are going to go for this confirmation? So we are bullish. We knew that this is not going to be taken by today because it's too far. It can of course happen, but I'm not expecting this is going to happen. So this market has the obvious liquidity over here. It is the only liquidity market has right now. So what did I say? Market will clear the liquidity. It will keep building the liquidity. This is a selling opportunity. It has built a new buy side liquidity. Look at this low and the high from here to here. This is the equilibrium. This is the deep discounted area. This market previously didn't come to the deep discounted area. Okay, no problem. I am gonna accept you. Okay, you don't wanna come here. Okay, I'll help you not to come over here. No problem. But this time you should come over here because you have this sell side liquidity around here. At the same time, this low has cleared that lows. So I'm going to remove this by thinking that it is coming over here. Going to mark the low here to here, around here. When this market started to fall, I'm looking at this gap. Some kind of reaction can happen from this gap, some kind of reaction. That reaction will send the price higher. How this is going to work? It will come here, it will send it higher, it will fall again to clear these liquidities, come for this unfinished business, then it will start to go higher, work with the premium area and go for this new buy side liquidity, this high, that high, new buy side liquidity. This is how this market is going to book the next price. While this run will complete it, okay, it will come here to this gap. I will have a new leg over there. So what I will do, I'll remove this gap and sorry, that line will mark for here to here, whatever low it is going to be created. Going to expect that maximum it can trade until the equilibrium. Maximum it can work with the equilibrium. then it will keep falling for this sell side liquidity over here, this relatively equal lows over there. So when it will come here, start to react, I will start to look for a selling opportunity. At the same time, if it doesn't do that, instead of that it keep going higher, for example it keep going higher, I will not take the trade over there. How do you know that you are going to take the entry over here? Two type of opportunity. First, 22 YT model. Do you have that? No. Second, first fair value gap here. See this first fair value gap. Second fair value gap. Count the candle. 1, 2, 3, 4, 5. Within 5 candle, did you get the entry? No, you didn't get the entry. No problem. Wait for the order block. That means this market will come here to this gap, then build an order block to give you the selling opportunity with the immediate reaction. That is the selling opportunity. Didn't build it the order block? No problem. Let the market go. Tap here, keep falling, let it go. Where? You know that it is now falling for this sell side liquidity. This is the obvious thing this market should do now. If it do that and you found your entry opportunity here, go for that trade. But brother, it didn't come here. I missed all the opportunity. It keep falling, keep falling, keep falling. I missed the opportunity. I was not able to catch that run. How can I chase this market? Look at this sell side liquidity over here, relatively equal lows. Look for the highest, sorry, above this fair value gap, the bullish, first bullish unused fair value gap. So you'll be able to see that from here, okay? So seeing no bullish fair value gap, no bullish fair value gap, retracement, no bullish fair value gap. Wow, I have the bullish fair value gap. What is this bullish fair value gap? Above this buy side liquidity, sorry, sell side liquidity. Anybody can tell me that? What is how I'm going to call this gap? Anybody can tell me that, please? Nobody wants to listen this, but I should keep talking about this. You can tell me that. Do I know that it is going to fall right now? Of course I know that. No, it's not the reclaimed fair value gap. It is the last fair value gap. Above this liquidity, this is the last fair value gap. The body will close below this fair value gap, one tick below this fair value gap. That's my selling opportunity from here. Where is going to be my stop loss? Below the candles that has built this gap as an inverse gap. 1, 2, 3, sorry, 1, 2, 3. This 3 candle has validated this gap as an inverse gap. This is the first body that is above that gap. So above this candle here, as you can see, there is a small gap. Would love to cover that gap as well. Just that gap. Will target this sell side liquidity by expecting not even a single body is going to close above this last fair value gap constant crossment. Not even a single body is going to close. If I see a body has closed, then I will move my stop loss above the order block. If it doesn't give me the entry, that's called the real bad luck. Because I was trying to take the entry from here, market didn't give me the entry. Absolutely perfect, because it is coming from here. It should work with the discounted area if it would love to go for that sell side liquidity. Absolutely perfect over here. But if it doesn't give me the entry from here, that's the call to the bad luck. Absolute bad luck, because I missed the last opportunity to take the entry for this sell side liquidity. In December, you will keep seeing this thing will keep happening. That means you are not going to get the entry opportunity. I'm listening to you. I'm to hear. I want to hear everything. By the way, please don't take this trade. Everyone, I'm requesting, please don't take this trade. The reason is it's the lunch hour. We are just observing the market. We are just seeing how it is going to move the price. But don't push the button, please. Knowing how this market is going to work is absolutely very simple, very easy, very, how can I say that? I mean, it's too easy. You have to be bit patient. You have to be bit conservative. That's all you have to do. Nothing else. Look, how did I know that it is going to fall now? When it came here, how did I know that? Why? Because it has cleared the most obvious buy side liquidity, traded that entry fair value from 15-minute chart. It's a good place for falling for this sell side liquidity. After taking this sell side liquidity, I'll start to look for buying opportunity again. For what? For these buy side liquidity market left over here. These highs. New buy side liquidity. So this is my selling opportunity because the range is huge. If I can catch the sell from here, that is the best case of scenario. If I fail to catch the sell here, that is the next opportunity or the last opportunity for me to catch that sell. Look carefully how this market is booking the market or the price. See, beautiful support. People are going to take the buy here. This market is going to reprice this rebalance area, or the, I mean, I don't know, wanna add this balanced price range, but this is something that is important. Market is going to rebalance the balanced price range. So maximum how far? Constant encroachment before clearing this sell side liquidity. That's my selling opportunity from here to until here. I prefer the immediate reaction. That means 1, 2, 3, 4. By the next candle, I want my entry. If I don't get it by the next candle, I will wait for this market to either to build the order block, or if it go higher, then closed below this gap again, give me the selling opportunity. Please don't take this trade. It's the lunch hour, so we are just watching the market. See the support, how the support is going to work over there. People are thinking, wow, this is a bullish market. This market went a bit higher before falling again. Sorry, uh it went it fall a bit to go higher again. The time I show you the last fair value gap inversed way, it is related with the balanced price range. I just don't speak about that balanced price range, because if I speak about that, you will get confused, because here lot of balanced, why not this balanced price range, why not that balanced price range? Because they are not, they don't need to be balanced right now. They should be balanced after clearing the sell side liquidity. When it will go for that buy side liquidity, they should be cleared over there. The balanced price range should be balanced over there. Right now, the lowest balanced price range, which is the last fair value gap, should be respected as a balanced price range for taking that sell side liquidity. More importantly, that reversal should not go above the equilibrium before falling, clearing the sell side liquidity. Remember, this red line is the sell side liquidity. Isn't it funny, guys? A small portion of price action, but I'm breaking it into pitches and see how many times I'm right. Giving entries or not, don't focus over there. It's December. Sometimes you're not going to get the entries. Sometimes it's gonna stop you out. A lot of things is going to happen. But while the price action is cool on February, think what you are going to do. You are going to catch that fall. You are going to catch that buy. You are going to catch the buy from here. Then you are going to catch the sell either from here or from here. Then you will start to catch the buy again. By knowing that how this market is working from your very high time frame, a very high time frame. This last gap is not random. This is from the 15-minute chart. Go to your 15-minute here. See this last gap from the 15-minute chart here. Where did it work? Until the 50% of that last gap as a inverse way. Not this balanced price range, not that balanced price range, not any of them. Just this last gap, which is your balanced price range. Market needs to make it balanced before framing the sell setup, to before building the trap for the retail traders. After building the traps, it will start to reverse again. After seeing this run, am I thinking that, oh wow, it's a bullish opportunity now? Of course not. What else can happen? It didn't trade or balanced this price range, so it will go higher, clear that high over here to take the buy side liquidity before falling again to clear this sell side liquidity. While it will clear that high, I will wait for a order block entry opportunity, bearish entry opportunity. If I didn't get the opportunity over here, I'll start to look for a bearish order block to take the sell until the sell side liquidity is not going to be cleared. In 15-second chart, while this low has been cleared, this is from the 15-second chart. If any of you has the opportunity to go to the 15-second chart, please go over there. In 15-second chart, you will be able to see that market fall, cleared that low over here, failed to trade this area around here. It has failed, okay? For the first time, I'll get an opportunity over here around there, trading that order block mean threshold. I'll start to look for a buying opportunity for this last fair value gap, constant crossment. More importantly, above that high. Go to your 15-second chart. If there is an opportunity, I don't think so if there is an opportunity here, but if there is two fair value gap or if there is a 22 YT model, whatever it is, if there is any, just look at that. I don't think so there is any yet. If it doesn't give me that fall for the sell side liquidity, I'll let this go because I have missed the sell from here. Not going to chase the market right now. Not interested to chase it. Instead of that, more interested to see before clearing this sell side liquidity, it is going to take that high, finish the unfinished business before falling again. So it is going to work like that way. That is the best case of scenario here, here, here. This is how this is going to work. I will go to the 15-second chart because that leg is a very small leg, a very small leg, so I can't trade it from 1 minute chart. So I'll go to the 15-second chart. We'll try to find any kind of buying opportunity from here, that leg. We'll try to catch some partial, put my stop loss to the break even, and then I will come back again to 1 minute chart to find out the order block to take the sell if this sell side liquidity is not taken. If it doesn't give me this leg, instead of fall, keep falling to take this sell side liquidity, this whole leg is going to be disappear from the chart, and I'm going to think like that way, like this way, for the new buy side liquidity after clearing the sell side liquidity. Until it's not clearing, I'm more interested to catch the buy. buyers buyers took the buy, got stopped out over here. Unfinished business. Either way, last fair value gap over here, you see this candle low, that candle high, last fair value gap, which is an unfinished business. More importantly, this inverse fair value gap, and the most obvious order block that market previously didn't trade. The most beautiful order block that market didn't trade before. Come here, new buying opportunity for that buy side liquidity. Are you kidding, brother? This is a bearish market. It was the retracement. Now market is going to fall. If it keep falling, I will have nothing to do because of course it can come over here. I'll just keep watching it. But when it is not falling until this low is not taken over here, I will keep waiting for a buying opportunity from here, around here, or from this new last fair value gap to that specific leg, new last fair value gap. When it will inverse, I'm not going to take the sell because this low didn't make any sell side liquidity. So this gap, I'm not able to frame it as a inversed way to take the sell. I can't do that. I could do that from here, take the sell because I had the sell side liquidity, but I can't take the sell from this gap, which is now gonna be a new last fair value gap because I don't have the sell side liquidity over here. If it could give me the sell here, that could be my boom. If it give me the selling opportunity here, I'm not going to catch it. Not complicated, not something random, not million of the fair value gap. It is very specific fair value gap. Look over here. Sorry, just let me show that. First, let me find out the gap. Then I'm saying which one is first. I don't have any bullish gap except this. Perfect. Mark this gap because this is the high which has cleared over here. Above this bullish gap, I have this bullish gap as well. Now as the market is too far from this gap, I'm going to mark that gap, but actually I should use this gap which is the real high. For here, extend it to your right. That highs has been cleared by that single high. This is the last gap, but this market is already too far from this gap, so I can't use it. But look at this gap, how it has been worked. first time it has closed by that specific candle over here. It has closed for the first time. This candle open, trade this gap. I have to cover the stop loss by this candle high, because this candle and that candle, these two candle has validated this as an inverse gap, a very specific gap where this last swing high has been cleared by that specific leg, and I'm now expecting this sell side liquidity is going to be cleared. So I was waiting to take the sell. I can also take the sell from this gap, which is here, around here. Going to use it after so long. After so long, I'm going to use this gap as well. Look over here around this area. See this lowest, sorry, what to say? I mean the gap over here. Keep that in your mind, okay? This gap here, around this gap. If this market cleared that low, failed to clear that low, remember it should be very specific. If it failed to clear that low, instead of cleared that low, this gap, when it will reverse, see how it is to react from that gap. Keep that on your chart until this buy side liquidity is not going to be taken. Not now. After clearing that low, it should be cleared by a tick. After clearing that low, then look, observe this gap, how it is going to be reacted as a buy setup after closing it as an inverse gap. Not now, because this low is not cleared. Yeah, it's not cleared. It's, see how beautifully it has built a beautiful support. Wow, take the buy, take the buy, take the buy. No, this market is going for that high. Go to your 1 15-second chart, look for the buying opportunity over here. See if there is any buying opportunity around that area. How long? Until to the top of this gap, more important, until to the 50% of this last parallel gap, constant crossman. Until to that area from 15-second chart, because this leg is a smaller leg. Until it's not taken, you will be in 15-second chart, you will keep waiting for two bullish fair value gap, very specific, either two bullish fair value gap or a beautiful 22 YT model. Just these two things, you will get at least the partial, and then by moving the stop loss to the break even, maybe you'll get stopped out to the break even, or you will get the huge boom until to the top, until this low is not taken over here. Of course I use the SMT, brother, but look at the price action here. It's not the right time to look for the what to say, I mean the uh, SMT here. Sorry, here, if you remember that area, while this market was reacting some specific level, reacting, that is the level I can look for an SMT, because I'm expecting higher price. I'm not expecting lower price. But here, when this is happening, I'm not expecting a higher price. I'm expecting a lower price. Remember here, I was expecting a higher price. So I was looking for this SMT. But now I'm not expecting higher price. I'm expecting lower price. Clear this liquidity. So if I look for the SMT, I will look for SMT like this. That this high, market failed to clear here. Nasdaq has cleared that high. Something like this type of SMT I will start to look for here if I am interested to catch that sell side liquidity. You understand, brother? Why I'm not watching it? Because I'm expecting lower run, but I'm looking for a bullish SMT. It's not something makes sense. Where it should maximum come to this 50%. Can I take this sell right now? No, you can't take it right now. Why? It takes too long to come here. So I'm not interested to catch any kind of entry right now after a long period of time. What I will do, wait for an bearish order block. It's not a signal, uh, or I'm not asking any of you to take that sell. I'm just trying to show you how you are going to anticipate the price action. You will wait for a bearish order block here for more confirmation to take the sell for this sell side liquidity. Okay, so it's not a buying opportunity right now. After clearing this sell side liquidity, when this market will come here or maybe here, any of these two lines, I will start to look for a buy again. Right now, everything is for me to take sell. Only if you have the 15-second chart ability, you, until these lows are not cleared, you are able to take a buy here until to the top, and more importantly until the 50% 50% of this last parallel gap. Here I will just wait for a highest up close body close candle to be like here, how to say, for example, this is the highest up close body close candle. So I want to see a body close below this candle will work as a order block to send the market for this sell side liquidity as well as until that area. If it is gonna be the highest up close body close candle, I will look for the low of that candle to frame my sell setup. Now market didn't give me the sell opportunity. It will keep going higher, keep going higher. Of course, I'm not going to take any kind of sell above the 50% of this gap, because this is the base for that selling. This is the base for that to take that sell. More importantly, high and low. Low, right? How far this market can maximum go? Until the equilibrium, which is over here, or maybe to trade this gap over here around this area, then fall closed below this last gap again. We'll try to frame the sell again. Come here, which is the deep premium. We'll use this gap, that gap, as an inverse gap to take the buy. Here to take the buy by covering the candles are going to validate it as an inverse gap. If it come over here around this area, the same gap I used to take the sell, I tried to use to take the sell, the same gap here I will try to use to take it as a buy. Why? Above this gap, now I have a very small gap over here. Of course you can use that one, but as it is very small, I'm going to use this one because it's too small. In other hand, you can, if you're confused, you can wait for this gap to be inversed. You can do that if you want. I'm not interested. Instead of that, I would have to go for this gap. Sometimes I'll get stopped out. It's absolutely cool. Okay. However, I will try to take that buy. Until then, here, here, it's my selling opportunity. From where? Please don't take the sell. It's just for your understanding the market. It's the launch hour. Don't go for the sell. So for the first time, I missed the sell over here. I will frame the sell from this order block. Take the entry there. Stop loss above the order block to tick or to handle above the order block. Target this sell side liquidity over here from that order block. If it is an immediate reaction, not going to believe it from here because it took too long to come here. So I'm not believing it. How far it can go? Maximum maybe it will come here. So I'm not interested to take that risk. I need the confirmation. The order block confirmation. We'll go for the trade over here. Try to take the partial around 1:1 after taking the trade. If it gives me, of course, we'll try to take the partial here and we'll hold the trade until this zone, which is an unfinished business. Whatever gap it is going to create over here, I want to see it will work as a breakaway gap. That means market come here, trade a very specific level, will leave a gap open for later use until it's not taking this sell side liquidity. Respecting from this bullish gap, that means market is respecting this bullish gap. Okay, this bullish gap reaction, I called it reaction. It's not the reversal, it's a reaction to send the market until the bearish PDRA. It will be reacted until the bearish PDRA, then the bearish PDRA will give me the reversal for the sell side liquidity. Now don't get confused, not to get entry over here. First of all, it's the launch hour. Secondly, this is December. Lot of times it's going to happen on February. You will be astonished by using the same concepts I'm showing it to you right now, because you will see how precisely it is going to work over there, exactly the same way you were expecting. Those people who are not interested to learn, please you can leave, because I'm not framing trade. All of this trade is not valid because it's in the lunch hour. I don't believe the price action around the lunch hour. I'm just trying to show you the logic behind framing a trade. This is the open, most sensitive line on of an order block. This is the open and the mean threshold. So I have waited to let this run go. Let this run go. How far? Equilibrium, more importantly, until the 50% of this last gap. After that, I was waited for the order block to be created. By that specific candle, order block has been created. I took myself from that order block, put my stop loss, one handle, two handle above the order block. Target is this sell side liquidity after clearing 1:1 partial. Okay, so after clearing 1:1 partial, we'll go for that sell side liquidity. It's all for your understanding, not to take that trade. It's not a signal. It's not something I'm giving you the signal. Okay, so please don't treat it as a signal. If you do that, man, it's your own loss. Okay, it has traded the most sensitive area of an order block, the opening of the order block. How far it can maximum go? Until the 50%, which I'm going to mark for here. The 50% is the maximum line this market can go, or tap here. Body is going to close below this 50%, then it will start to fall dramatically. This is the mean threshold. That means body should not close below this mean threshold. Sorry, above the mean threshold. It can trade the mean threshold, nothing wrong, but body has to close below this mean threshold. Even if one body has closed, the next body has to close below the mean threshold. It's not an trade. It's not something like you are going to push the button, you are going to take the entry. Please don't do that. It's the lunch hour. We are just trying to figure it out how this market is going to work. Okay, that's all. What is the importance of this order block? Why this order block is important to me? Because it has cleared the liquidity. So liquidity clearing job is already done over here. Already done. The liquidity has been cleared. So if it would love to go higher, then it is going higher for trading this high. I'm not interested to see this high is going to be taken, because this high is an intermediate term high. It has been taken means it is going for that buy side liquidity before clearing this sell side liquidity. So I would love to see this order block, which is the change in state of delivery. That bullish change in state of delivery is going to be now bearish change in bearish market. Okay, so the bullish market is going to be bearish market from this order block, and I would love to catch that sell at least for the partial, and then we'll go for the liquidity or the extreme liquidity, more importantly until this inverse gap. After trading the order block mean threshold, the first thing I would love to see a bearish gap that will be unfilled. So this bullish gap, it has done its job. Here, it has done its job. That means it hold to the market, send it higher to trade the bearish PD array. The bearish PD array. Constant crossment or the top has been rejected, low has been rejected. All the job is done over here. Now it should keep falling by breaking this gap. I don't want to see any kind of reaction from this gap. So the way it is reacting from the constant crossment, I don't like it. I want to see it will go through this gap with speed, like very speed. It will go through this gap. Kind of boom, something like that. One candle or maximum two candle will take to break this gap, because the job is done over here. It should not start to react. The market should not start to react from this bullish gap. Previously it was important to me because I was needed the PD array to be taken, to be traded, the PD arrays to be traded from where? From this bullish gap. That's why it was important to me previously. Now the reaction is done. I need the reversal from this gap. I don't want to see any bullish PD array is going to hold the market, sending it higher. I want to see it will go through this bullish gap and it will fall for the sell side liquidity. The highest up close body close candles are the propulsion block. Market has built the propulsion block over here. It will trade the propulsion block, it will fall. That is how I'm expecting this market will work. Is my stop loss in the perfect area? Sometimes I say that I should put my stop loss over here, but unfortunately it's a huge stop loss, so I'm going to put it over here because it's the most logical level to me, something like that. Something I tell something like that. Okay, but now this is the best area to put the stop loss. I mean, one tick or two handle above this gap or above this line is illogical to me to put the stop loss. This is the best level. where I should put my stop loss. I didn't compromise my stop loss over here. If I would put it here, maybe just cover the min threshold, then I would say that okay, I should put it here, here, that is the level I should put it. But I'm not able to do that because it's huge. So I'm going to put it here. If I get stopped out, I'll try to take re-entry. But when I'm going to put it here, which is above the order block, this is the best area to put the stop loss. There is no excuse. Okay, brother, I got stopped out so that I can take re-entry. No, there is no excuse because I covered not only the high of this order block plus two handle. I covered plus two handle of that order block. So this is the best area to put the stop loss. I didn't compromise it. Okay, so sometimes you see that I compromise my stop loss. Here it didn't. I didn't compromise it. If I get stopped out here, it means that that sell was not going to work. So I was either in a consolidation or maybe market has another plan to go higher instead of going to take that sell side liquidity. Maybe I was wrong to think that this sell side liquidity should be taken first before going for this buy side liquidity. I don't like these things because it's respecting this bullish gap. I'm really not liking it because market is in lunch hour. Maybe it's in time distortion. Maybe it would love to go for that high one more time. I don't know. Maybe because I don't like the reaction from this bullish gap right now. Until here, it was okay. But the way it is reacting now, no, I don't like it because the mean threshold is a very sensitive line. It should not be traded many times, okay, because it should be traded like one time, maximum two time. Okay, third time means already this is gonna be broken because this is not a strong water block. Even if the body close below this pin threshold, I'm not feeling good to see this water block the way it is holding the market. I need immediate things. I need speed. I need something that is telling me, okay, I'm very strong PDR, so you can believe on me. But the way it is trading, the water block, I'm not believing it. If I were in this trade, for example, I were in this trade, for the first time, I'll get the opportunity, I'll move my stop loss above this min threshold right now. So something like that. Right now, my stop loss is over here. Just saying, if I were in this trade, what I would do after seeing one rejection, two rejection, when it came for the third rejection for the min threshold, I know that this order block is much more weaker right now. It's too much weak. So I will wait a candle to close below this order block now. After third time traded that min threshold, I will wait to see if a candle can close below this order block one more time. If I see it has closed below this order block, at least one tick below this order block, my stop loss is going to be immediately one tick above this min threshold because I'm not expecting it will come back again to this min threshold because it's already weaker, a very weak min threshold. That means anytime it can be broken and market can go for that high. Sorry, market can go for the high over here. So for the first time, I will see it will close below this order block. I'll move my stop loss above this min threshold. If it comes fourth time over here, it is going to catch that run or that high over here. So I don't want to take that risk. It will close one tick below this order block. I will move the stop loss. In this type of scenario, I told that please don't follow my trailing stop loss because sometimes what happened, it may be one more time it trade here and then fall. In this type of scenario, some people get started and they started to, brother, I copy your trade. You should not copy my trade, brother. You should not copy my trade. I'm working with the logic here. Why I'm thinking like that way? Because third time it built the min threshold very weak. So when it closed below this order block, I don't want to see the market maker will let the market go until the weakest place of this area, weakest place. I don't want to see it is going to happen. In that type of scenario, this lowest PDRA is gonna work as a support and market will keep falling. I would love to see like that way. But until it's not going to close below this order block, my stop loss has to be over there. Even if I get stopped out, nothing to do. Or what else can happen? Or what else you can do? I don't do that because I can't do that. When it go below this order block, you can simply close the trade. You can do that. I can't do that. I just try to move my stop loss. Either way, it is not a trade. Okay, so if any of you are trying to frame any trade, please don't do that. It's the lunch hour. I'm just trying to show you the logic how this market is going should work, how you are going to take that decision. Now what should you do, buy or sell? What should you do? Why it is reacting from here? What do I have over there? That's why this market is reacting. Can you see what is happening over here? This is the old week opening gap. This market is tapping to this old week opening gap. Let me actually put a line over there. You will understand what I mean here. Okay, this is the line which is the old week opening gap high. This market is tapping to this old week opening gap high and rejecting from there. It is struggling to break that old week opening gap high. I'm not bullish. I know this market is going to fall for this sell side liquidity, but the reaction of this old week opening gap high can take that high one more time. That's why I told whenever I'll get the opportunity, I'll move the stop loss to the break even or at least above the mean threshold, because it should not be respected and it should be broken. Market should keep falling. So finally, market has cleared some buy side liquidity over here. After that order block has been created, this is the final or the last time market has cleared some buy side liquidity. Failed to take that extreme high here. If you are looking for an SMT, this is the place you will start to look for your SMT. Do you see any SMT over there or not? Okay, so you'll be able to see that here this high has been cleared over here, around here, there. At the same time, it has failed to clear that high. So you have a beautiful SMT over here. What you are looking for? Sell. You will look for a bearish SMT, not a bullish SMT, because you are not looking for a buy run. If you are looking for a buy run, you will wait for a bullish SMT. So in this case of scenario, you will look for that low has been cleared over here, or maybe that low has been cleared over here. So there is some kind of bullish SMT. If you are looking for a buying opportunity, as I'm looking for a selling opportunity for the first time, this market has cleared some buy side liquidity, failed to take that extreme high. I need to confirm that this high has been cleared as well. So here I have found that, oh wow, this high has been cleared over here. So I don't need to worry about that high because I have the SMT over there. Come on, come on. I don't know. The dance floor. Oh, carry on. I'll just close my stream after it hit that sell side liquidity. Then I will show you the, I will close the stream actually, because I need a bit more to add over here about the sorry, what, how to say that, premium anti discount. Actually, let me show that to you. It's gonna be important. So you already know that this is the equilibrium to that specific leg high and the low. This is the equilibrium where the market has traded, right? So this is that equilibrium. I'm going to remove this one. Don't forget about that. It has all this price action is inside that leg over here. That is the leg. Where below here I have the sell side liquidity. Above here I have the buy side liquidity. Now in this small price action, this low has cleared by that low. See here, this high has cleared by that high. So I'm going to mark a new leg here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candle. All of these candles are in between here to here. This is the new leg. Market started from here, around here, went higher. This is a bullish market. You are expecting this is a bullish market, sorry, bearish market. what should you see first? It will come to this deep discounted area. See this line? It has to come to this deep discounted area if it would love to keep falling. Why? Because if it is not interested to keep fall, then it should work with the premium area, more importantly with the equilibrium, and then it should keep going higher. Around the equilibrium, I have this bullish gap. See this bullish gap? Oh, by the way, I forgot to move my stop loss. What did I say? You remember? For the first time, it will close below this order block. Here, this is the first time. I'm going to believe this order block, that this order block is going to hold the market. It will never be able to go back to this mean threshold of that order block. So for the first time, I will see this candle closed below this order block. I will move my stop loss from there to here, just covering that mean threshold, maybe like 1-2 handle above this mean threshold. By believing this order block is going to hold the market. Next candle open, trade the order block. See, trade the order block. This is the third candle. How it is going to treat with this gap? Just look at that. How it is going to treat that gap. I was needed to see this run here, around here, but unfortunately it didn't give there. Absolutely okay. I was observing these candles, waiting for moving my stop loss. Whatever gap it has been built here, without clearing this sell side liquidity, if it fill this gap 100%, that's a bearish breaker block entry opportunity for this sell side liquidity. This is going to be my partial over here, around here. See this partial line, 1:1, remember, 1:1, and we'll put my stop loss above the unfilled gap. I'm going to expect the gap is going to be created here. It's gonna be the unfilled gap. We'll put my stop loss above the unfilled gap or to the break even, whatever you say. We'll put the stop loss to the break even after clearing the partial. Why partial is very important to you, brother? It's going to take that sell side liquidity. I don't know that. Before clearing this sell side liquidity, it is not going to take that buy side liquidity one more time. So what else can happen? It will go higher, it will clear that buy side liquidity, then it will fall for the sell side liquidity. It is also possible. I don't want to get stopped out after clearing the partial. Don't want to get stopped out over here. So we'll put my stop loss to the break even. If I get stopped out, we'll try to take resell until the sell side liquidity is not taken. We'll try to take resell whenever it will clear some buy side liquidity. Now this gap, bullish gap, was very strong, right? It has been broken. So from 1 minute chart, I don't need to keep this gap anymore. From the 50-minute chart, you will be able to see this old week opening gap that's not broken yet over here. That means 50-minute candle didn't break below this gap. So if I saw the market has closed below this gap, I can simply put my stop loss above the old week opening gap high. Unfortunately, it didn't close yet. Still, it is holding the market. Trade that weak quadrant level over here. You can just mark it and you can observe it by yourself. Reacting from there, still holding this old week opening gap, is holding the gap. Retest this order block. Is it going to take that buy side liquidity? I don't know that. I'll get stopped out over here. After taking the partial over here, we'll get stopped out to the break even, or maybe above this gap, a small gap, we'll get stopped out over here, and we'll wait to see if it can be taken this gap, or sorry, this liquidity before falling again. Or if it doesn't do that, I'll just let this go, because now I will have no opportunity to take the entry. Right now I don't have any other opportunity. But if it could keep falling, I would get that boom over here. On social media, what you will see, this. Trust me, on social media you see these things. They took the trade here, stop loss is here, going to hit the target. More importantly, I told you it will come here, something like that. Okay, so you will see that they got the boom. But while you are trading, you are in a trade, you have to move your stop loss, you have to take the partial. That is the way we should trade, because when it is going to work, I will show you that example. But when it's not going to work, instead of that going higher and stop me out over there, I'm not going to show that to you. You are not able to show this loss. While you are seeing, okay, this guy has framed the trade here from this order block. Wow, this guy is awesome. He knows that what he's doing. Okay, so he took the entry over there, stop losses over here, only 24 handle, and got 53 handle. Okay, this guy has framed the buy here, and put his stop loss below this breakaway gap, just a bit below of this breakaway gap, and his target was this buy side liquidity. Remember that buy side liquidity over here, that buy side liquidity. So his target was this buy side liquidity. Wow, he has got the boom over here. Look at the risk reward ratio, 1 is to 5.4. This is awesome. That guy is awesome. Here, 1 is to at least 2. Okay, at least 2, something like that. Wow, he is going to get that boom as well. This is how you can't trade, brother. You can't trade like that way. So you push the button here, you hold the trade until there, and then you push the button here without moving a stop loss. You push the, because sometimes it react in a PD array and go for that some liquidity you got stopped out. So whatever you take the partial, that's gonna gun from that loss, or maybe you didn't take the partial, you will take that loss. If you take that loss, you're not going to show that to me. I'm not going to show you that, brother. I took that entry, my stop loss was over here, that was my target. After reaching until this area, I got stopped out. Okay, I'm not going to show that to you. So the things I'm showing you, this is practical. You wanna like it or not, it's up to you. All I'm trying to show you how this market is going to book one level to another level. Very specific. It's not something random or something like, oh wow, it's randomly worked over there. Until now, the way I told you this market is going to work, how many times I was wrong? I got stopped out here. Remember here? I think around this area I got stopped out. Or here, I don't remember where I actually got it. I think here. Yeah, here. Just I failed to cover that old weak opening gap low. Otherwise, I would get that boom. I don't need that boom. That boom is more than enough for me to get the boom here. From here to until there. That area, which is 91 handle, something like that. Also don't need that run until that area. It's more than enough for me to be profitable. After taking this trade, 1 is to 1 is here, 26 handle, I guess. 26, yeah, 26 handle, something like that. It's more than enough for being profitable here, being profitable there, after taking a 22 handle loss over here. Remember the 22 handle loss over there? Took the entry from here somewhere and got the loss. Care about that, brother. Because I know what I'm doing, and when I'm explaining that to you, you also know what you are doing. You should have known that what you are doing, exactly how this market is going to go from one level to another level. Just you have to focus the things I'm trying to show you. That's all, brother. Now your trading style, maybe you took the entry here and you just went outside. Okay, so either it will hit your target or it will hit your stop loss. If you trade like that way, that's absolutely different. But that's not the way I love to trade. Every single trade on this time frame, I frame it before it happened. So when this market was falling, I have already framed the buy in my mind. When it was going higher, I have already framed the sell from here around that area. Framed the sell. That sell has been already framed when I missed that entry opportunity over here. Everything you have to frame it before it happens. Sometimes you will take that entry, sometimes it will not give you the entry, sometimes you will take the entry and it's a loss because of your tight stop loss, not for the putting stop loss, because of the tight stop loss. Every single time I got stopped out, it's because my tight stop loss. But sometimes it doesn't work. Out of 100, maybe 80 times I'll be right, 20 times it's not gonna be right, and that 20 times is gonna kill my career, kill my all the profit I have built by that 80 winning trade. So I don't want to take that risk. Instead of that, I would love to go for a 20 handle partial, sorry, 22 handle loss, then we'll go for that 34 handle partial, 34 handle, or how much was that, I don't remember. However, and then we'll we'll stop trading because I know what I'm doing, but I don't need to over trade. I'll just let this go. All of this consolidation doesn't mean anything to me. All I know that it is going to fall for this sell side liquidity, this lows. It doesn't mean anything to me. I know that it's just the time distortion. Market eventually it is going to fall for this low. After clearing this low, it will reach here. It will start to go higher. Maximum, how far it can fall. Maximum. If it reverse from here, that is the best case of scenario. If it come here and then start to go higher, that is also okay. This is the maximum, but best is from here. That is the best area for the market to reverse again. For what? For this buy side liquidity over here around this area. Okay, guys, is there anyone who can uh, who has some kind of question or something? If you don't have, then I think I will close the stream because it's taking too much time. It's not falling, but please keep that in your mind. Uh, the area. Okay, so just mark it and then keep it. Again, brother, I'm trying my level best so that you can understand these small pieces of the price action. It's not random, it's all logical. You don't need to be perfect, but you have to have an understanding of the price action, where and why, when and how it is going from one level to another level. Just if you can understand this whole portion, you are done, man. Sometimes you'll get the opportunity, you'll get the boom. Sometimes you'll take the loss. That's gonna be 80 is to 20. So 80 winning trade, 20 losing trade. Absolutely acceptable. And sometimes this market is not going to give you the entry opportunity. Like here, it didn't give the entry opportunity. I was never been interested to take a sell here because I knew that it's coming here. When it come here, that was the next opportunity to go for the buy. Remember here, that was the perfect buy. Obviously, beautiful buy over here and here. Then selling opportunity from there failed, no problem. Here failed, no problem. Here last opportunity, take the sell from the order block. Go for the sell, liquidity taken, come here, start to look for buy again. Didn't go higher, keep falling, let it go. Don't touch it. You don't have the sell liquidity. Don't go for the sell delivery. Just let it go. December is a bad price action, so you have to accept the beauty of this bad price action. Ah, thank you, Dora. Market started showing the December price action. True, man. And bro, there is an SMT1 NQ and ES on 4-hour chart. What type of SMT, brother? Are you thinking about this? Yeah. Yeah, I can see, brother. Remember, I'm not bearish, okay? I'm not bearish. I'm bullish. I'm bearish for a short period of time. So here, until this liquidity, see this lows, until this liquidity, I'm bearish. So in a short period of time, I am bearish, but eventually I am bullish. Just because of today's market has done its job already, I'm just bearish to catch some kind of sell side liquidity. Okay, it's not something like that is according to my bias. No, I am bullish. So for the beginning of this market, I was bearish. If you remember, I was bearish. How far this market can maximum go until here? So if it go higher, so I will look for the bullish run first. I'm not going to touch that bull run. Not going to catch that buy. If I would love to catch that buy, I will immediately close it when it will tap to this area because this is the last line this market can go. But eventually, I am bearish. I'm not bullish. I am bearish. When the sell side liquidity has been cleared, now I'm not bearish anymore. I'm bullish. Every single time it will give me the buying opportunity, I'll take that buy. In the meantime, if I find some selling opportunity, I'll try to take that sell. If I get that, or I will let this sell go. Will wait for the buying opportunity only. Only I will take the buy. It depends on you. I am bullish. I can just simply let this sell go, or I can try to catch that sell until most obvious level, then I will go for the buy. It's up to you. But basically, until this is not happening, this is the expectation. Yeah, this is that exact thing I was expecting. From here, maximum until there, maximum until here, then buy run. This is the leg you are watching right now. So this leg happened already after the market opened. This leg already happened, came until this gap. Then this leg already happened and came until this gap. This is the extreme line. This is the extreme line. It came to this gap here. Now you are watching this leg. See this leg? You are watching this leg. Just let me show you this. You'll understand what I mean to say. So you are showing me the uh, SMT. I agree with you, brother. I want to see that SMT because I am bullish. Here, I have already explained everything at the beginning. You guys can watch the first part. Okay, here, that was the screenshot I took yesterday before the market open. One more time, for the last time for today. Okay, here I was expecting it will come here maximum. This is the best area for reversal. Why? The 50% of that range, premium anti-discount range, this high is the exactly the 50%. But this gap is aligned with the 4-hour constant encroachment, range constant encroachment, 4 hour. That is aligned with that 4-hour gap. So that's why I was expecting it will first come here, then it will fall. That is the best case of scenario. It can start to fall from here. I have to take the sell after closing below this gap until the last gap. Again, the last gap is market is going to close below this last gap until the sell side liquidity here. This is that sell side liquidity over here. And then more importantly, until over here. When market came here, I will start to look for buy. All of this fall is the accumulation for taking the buy. Or what? First, this unfinished business will come here, react from there, used the last fair value gap and as well as some other PDRA for this buy side liquidity here and the buy side liquidity, the extreme buy side liquidity over there. That is the extreme buy side liquidity. This is the equilibrium of that whole range. Look at this market. This is the low, this is the high, this is the equilibrium from the daily chart. If I go to the, sorry, from the 4-hour chart, 4-hour and the daily chart, both of them are the same. And from here, by where was the leg? I think that was the leg. Forgot where was the leg. Also the 50%. I don't remember. However, look at this buy. I mean this high and that high, relatively equal highs. Buy sell liquidity, buy sell liquidity. Market is in the deep discounted area. From 1 minute chart, we have find out an opportunity to take the sell for this clean sell side liquidity, which is here. I don't need that one. The sell side liquidity here. See this clean lows over there. I'm more interested to see it will work with this lower quadrant area or the 50%. Sorry, that it will come to the lower quadrant. What does it mean? It come to this lower quadrant means it came to the deep discounted area. It came here means it is going to clear that low. If it failed to come here to this lower quadrant to that specific leg from this low that high, this is the new range. If this market failed to come until this lower quadrant, it could go higher to clear that high. When it came to this lower quadrant, it is confident for me that this low is going to be cleared. After taking the liquidity, this market just can't simply move. It can't do that. It's a random level. But what it has to do, it has to come to this last fair value from 1 minute chart. More importantly, to this order block, which is an unfinished business. Trade them. Let's start to go higher. For what? New buy side liquidity. See this buy side liquidity, new buy side liquidity here. Here, buy side liquidity. And finally, for this buy side liquidity. Not today. This is the whole week plan. In one screenshot, I gave you the whole week plan. Sell side liquidity. How it is going to be cleared. That's the sell side liquidity. I'm going to remove this quadrant level. I'm going to show you this whole price action. Look, it never came back again to this order block min threshold. What did I tell you? When this market will close below this order block now, after trading it 1, 2, 3, 4 times, first time it will close below this order block here. It closed below this order block. It never go back to this min threshold. Yeah, it has traded this order block lot of times, but never go back to this min threshold. It should not go back over there because it's the weakest PDRA right now. It has already you shoot on that wall. This is a wall. Just think like that way. This is the bulletproof wall. You shoot here first time. You shoot exactly the same area again, again, again. It was near about to broke in that time. By anyhow, you you went too far from that level, that line. You went too far, and there is another wall over here. So what you started to do, you started to shoot on that wall now, which is the order block. So let me, which is the order block now. So you shooting, doesn't matter. This is the first layer. This is the deepest layer. If it is broken, this whole wall is going to be broken. But if it's broken, thousands of the time, I don't care. It can't be broken. It's broken, no problem with that. It's broken means this wall is broken. Market is going for that high. I want to see it will work with this outer layer, not the inner layer when it is already weakest here. Very weak already. Would love to see it will work until the sell side liquidity is not taken. But it's taking too long because this is the first of all launch hour. Secondly, this is the December month. Okay. Great lesson. Great session, T2. See you later. See you, brother Jaka. Tomorrow is Tuesday, so how do you think manipulation will happen? We'll talk about that tomorrow, brother Livingston. If I'm not dead, then I will be here, inshallah. I'll talk about that tomorrow, brother. I hope it's okay. When we mark fair value gap, do we need to include small imbalance gaps together? It's the best thing, brother. If you can mark the imbalances, that is the best case of scenario. For example, if I'm interested to mark this gap, this candle high, that candle low, it's beautiful. There is nothing wrong with that. But if I would love to mark this gap, this candle high, there is a gap, small gap. Say I'm observing this gap, for example, okay? So I would love to add it from here to here. I would love to see how the bodies are respecting this gap. Is it respecting this gap or the bodies are closing out this gap? Remember, opening and closing is different. Thousands times different. This gap is still holding the market. The consonant crossment is broken because that candle has closed above the consonant crossment, but there is not even a single body that has closed above this gap. So still, this is a very strong fair value gap. This bearish gap is a very strong gap. You will be able to see that how beautifully it is holding the market. See here, wick did the damage. I don't care about the wick. Body opened above this area. I don't care about that because it's another liquidity void. Market came here, 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 finally here to trade the liquidity void. I'm going to mark another box over there. And what I mean here, this box. This is another liquidity void. So for the last time, market has traded the top of this liquidity void high here. The top perfectly rejected from there. I want to see the bearishness right now to take that sell side liquidity. No more time distortion. This is the best sign that I'm going to fall to take that sell side liquidity when it reverses from the exactly to the top, something like so precise, tick by tick. That's the confirmation. Now is the time for the big run. Previously, you can see here, it didn't respect it exactly to the top. It didn't respect it exactly to the top. But this candle perfectly rejected from the top to that small volume imbalance. I don't see any logic for this market to time distortion. It should keep falling now. Fall is happening here, is struggling with the new weak opening gap or the old weak opening gap over here. This is that old weak opening gap market is struggling to break. But this sell side liquidity is something market is, it's kind of magnet. It's it's trying to go higher by using this old weak opening gap. But the magnet is, it's kind of come back to me, take me. It's just keep calling the market. Okay, think like this is the fox, this is the hen. Okay, the what to say, chicken. This is the chicken, this is the fox. Okay, the chicken is cock, they're just calling, okay, the market, and the fox is trying to get away from here because he knows it's a very dangerous area, so he can get caught. This is the sign or the place that is telling the fox, go away, don't come back, don't come back. But the chicken is still calling the market. Okay, so it's trying to come back here to clear that chicken, and then by using some kind of forest, this is the forest, it will use, go toward the area it wanted to go by breaking that human trap, something like that. Okay, think like this new week opening gap is the human trap. It will try to do that. If it doesn't do that in that type of situation, he will this market will be very much afraid of that human trap, which is the old week opening gap. It will go for that buy side liquid, which is a low probability to me, and I'm not interested to see that. uh, 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 uh. Is Blue Guardian a good prop firm, and do they pay out on time? Absolutely, sir. If the late 24 hours, sorry, 48 hours, they will pay you extra $200. Okay, they will pay you extra $200. If it come here, this high is obvious. If it touch this min threshold, this high is obvious. I don't want to see that it will retest this min threshold one more time. And this gap is broken now. For the first time, it has broken by that specific candle. It can work as a support now to go for that buy side liquidity. So what does it mean? It is going to take that liquidity or maybe the levels, quadrant levels, and then it will fall again for the sell side liquidity until it's not cleared. I won't be able to frame any kind of buying opportunity. I should keep looking for the selling opportunity. However, guys, that's all for today. It's some time distortion. You can see all this market is consolidating over here. So maybe if it was a trading opportunity, would be get stopped out after taking the partial, get stopped out to the break even. It doesn't mean that I would start to look for a buying opportunity over here to think that it's gonna go higher now. I will let the buy go. We'll wait for the selling opportunity again. If it provide me that selling opportunity, we'll take that sell. No buy is valid until the sell side liquidity is not taken. After clearing the sell side liquidity, trading any of these two, buying opportunity is gonna be appeared on the chart again, or maybe from this breakaway gap, which is the maximum. If it keep falling, no trade is valid. If it keep going higher, until this is not broken, no trade is valid until it's not broken. It's broken, and the PM session, that is going to be my new buying opportunity for that relatively equal highs here. More importantly, until to the top of this last fair value gap, something like that. All of this run, when it tapped to this min threshold, it's obvious that it's going to trade either the quadrant level or to the top of this candle. I'm not interested to touch this buy run because it is not according to my plan. My plan is this market will fall, clear that sell side liquidity. So what is going to happen here? Not a word of that. I'm not uh, sure about that, so I will not catch the buy. Instead of that, whenever I will get an opportunity to take the sell below this gap, I'll try to take that sell. First time it will close out this gap, that's my buy. Very planned way. Otherwise, I will not go for any kind of trade. Which chicken? Butter chicken or fried chicken? I was kidding, brother. Okay, thank you so much, guys, for being over here. See you tomorrow. Until then, cheers.